Okay. So it's been a fruitful day so far. We did not get faked out. If you sold the Iron Condor from this morning, you have profits. About 25% on either side. You can leave them. I mean, we're going into a pretty big event for emotional markets. So we identified that area up there at the top, the white, and it paid us really well. We identified this area and it worked out. This is no longer necessary. I'm going to reuse it. I'm going to put it here. 672.8. Super fast comments. As you approach that, if I had calls, I would be exiting the calls here. Let's see what the options are doing. The options are not bearish, so I wouldn't hold a put with confidence. Let's check out on the SPY. The SPY says differently than the SPX. So there's like points of contention. We have the ETFs collectives that are making all the hard work, doing all the hard work. You can see how they are placing a short-term bullish opportunity. It's not a reason to expect an upside. It just says if we do a little bit better on the collective of the ETFs, we might extend the greens here. Meanwhile, the mega caps are dragging. And believe it or not, the one that's dragging a lot is the chief mega cap, which is NVIDIA. But I told you those targets yesterday on NVIDIA. So that's playing out. There's no rally in the S&P without NVIDIA. That's my take. You might have some greens, but then you can't sustain the rally. Case in point, we're flat. We're down on the NASDAQ. Clearly, the effect of NVIDIA on the NASDAQ is a lot heavier than the S&P. It's still 8%. The ETFs, like the XLF, counts as 1.5 NVIDIAs. More. So it's a legit force. Let's see here. I'm streaming on X and YouTube. People here in the live room, 150 people. Can one of you find me? And let me know where it's at. Is it coming through okay? Okay, this is our foray into putting the message out there that we're doing good work. If somebody traded with us today, they had the opportunity to create $150 per contract. Yay! No, I know where the YouTube is. How about the X one? That's the one that's a mystery to me always. Media studio. Let's go, producer. There it is. It's live. Now, how do we get the link? Is that it? There it is. Copy link. Yeah, I would rather us get to Twitter. See if this takes you to Twitter. You do? Is this it right there? Let's go. Let me confirm it. Yep. Thank you. So let's hit it. Time delay? Yeah, there is a delay. That's why I like this platform here. There's the lowest delay I've seen. Okay, Options. The options box has disappeared. You know what that means. There's a lot of movement inside the options. All right. So we have just closed all the gaps from this little dip that we just had. If you want to restart a put, you can. I don't love it as much as the earlier two times, maybe from a higher point. If they dare go into the blue dashes, that's when you can probably start another put. That'll be the third. And you had the opportunity to buy two calls. I didn't call them out, but you definitely have the opportunity to buy two calls and make money with that. If you were lucky enough to have bought a call, this is your exit point as we approach these two white circles. We do have an event today. So logic dictates that's not a fact, it's just observation. They don't do much drastic things beyond limits. So they ping pong inside of a zone that looks drastic, but then it doesn't play out. I doubt it. We'll see. Okay. Let me know if you have some slow trades. This morning we discussed some slower trade opportunities. Look at the middle screen right here. If you're on X, make sure to know that there's a delay. So if I said I belong here, make sure that you're looking at levels and not comments. The delay, I think, is like 10 seconds. I'm honestly don't know exactly, but I do have 150 people in our live room, and there's hardly any delay there. If you're not a member, I invite you to become one at simplestocks.com. Doesn't cost much. I give you my entire day, all day. You look at my screens, we kick ass every day. And this morning, we already set up an iron condor that you can scalp now or leave for the end of the day. We did that yesterday. The trades this morning, we had two very successful puts. You can have a third one here, perhaps. Two call setups. I didn't take or call out, but they were available. And also some opportunities in some stocks. Like before the market opened, Chewy was a buy the dip opportunity, and then it was too fast. I wasn't able to capitalize on it, but they did bounce. Somebody here did. Also, there are a couple of people looking to short silver, gold, and ResMed for some reason. I don't know ResMed much, but they are all shortable. They're going into areas where there should be resistance. So you should expect some sellers to show up there. Today, it's all about the KRE. Yesterday was all about the KRE. You had to be in the room to have your mind blown with the comments we did with the KRE. So if I'm right about it, you should put it on your screen and watch it today as well. It's going to be something to watch. So the KRE right now is challenging yesterday's highs, right? And it's a leading indicator, in my opinion, to the XLF, but they're not in the same shape. The XLF, if you look at yesterday, they had a higher high, which was mind-blowing, and then they had a lower low, so that's an engulfing range to the day prior. And then on top of it, today they ticked lower than yesterday's lows, so technically they registered a lower low for the AVGOs. And now they have to struggle with the overnight high, 53.8 XLF, and 53.95 XLF, yesterday's high. Believe it or not, pennies matter a lot for the XLF. It takes a lot to move it 10 cents, but it matters a lot for the SPY. It counts more than an NVIDIA. It's like an NVIDIA, 1.8 NVIDIAs as far as heavyweight on drag on the S&P. So you have to pay attention, and they live in here. The breakdown of that group right here. Look at the industrials taking off. So that's costing me money since I'm short cat. The discretionary, that's probably Tesla, Amazon. Amazon is strong today, trying to recover some bad jags. XLE, there's some headlines coming out of Exxon, Chevron. I don't remember which one, saying some things like, oh, I'm going to make more money. And people are chasing it. They're not the same anymore. They don't trade the same. But the XLE is made up almost half of it, two stocks. So regardless of oil is falling apart and the XLE is rallying. That's weird. So there's an opportunity there. I don't like to trade oil. So I shorted Exxon at the top a few times, and that was high profile, and we won. I'm waiting to repeat. So here's the KRE. It's a regional bank ETF. And I'm not so much wanting to trade it, but I want to read what its implication is on the XLF and thereby its impact on this guy. All right, so I would buy the same put right here as earlier, and it was an at the money put 683, and it is now $204 again. Same. So the first time we bought it, it was 222, and it rendered $45 profit per contract. The second time it was $2.03, and it rendered $55 per contract. So I don't have a specific. Well, I do. I expect a small dip. Also in the IWM, if you're trading the IWM, we registered to put there that I didn't call out, but Corey did. If you see me looking way up, I've moved my monitors around, and I have some that are way up there. I don't have a specific reason for a put, so I have moderate conviction at best. This is a crazy market. They might want to pop up and then come down. So instead of paying $200 for that put, at the risk of missing out, you might want to offer them like 185 or 180. This way, you won't get into that put unless they go up. Okay, so if they don't go up and they start falling down, you miss out, but at least you don't get trapped holding a put. Your entry point will be stronger. So I see now the price is 187.86. Let's see if they do that, or are they committed to a breakout? So this says they're committed. Inverse head and shoulders target is way up there. What, before the Fed? That would be surprising. If you look left far enough, there is an overnight high that they haven't gone to yet. The timing is impeccable. These bulls know exactly what they're doing. The timing is impeccable. This is outside of my opening range time wise, right? So now it's critical to come back below 683.50. Otherwise, you launch 685 path. We'll see next 20 minutes what happens. 185 is the cost of that put now. You can buy it and say, okay, I have medium conviction that we might dip one more time, and say, I'm only going to risk $30. I don't like to take medium conviction trades for me if I'm risking big money. But if you've never traded fast and you want to get the first one out of the way, win or lose, you want emotions, right? So doing paper trading is not good. Paper trade until you learn the buttons, like where do I open an order? Where do I adjust an open order? How do I cancel an order? How do I close an open position? Those are important. So use paper trading for that. Beyond that, paper trading does nothing. It's not practice. It's fake practice. You're all in all the time. You need to suffer some real consequences. Luckily, here we're talking $50. Okay? All right. Looking left, this is the high of the pre-open. Let's see what they do with that. The VIX is still at the higher levels of approaching the mid-range of yesterday's range. So assuming you bought this put for $185 just now you say, okay, I spent $185. It expires today. The SPY is the vehicle. And I won't let it go below, pick a number that you're comfortable with. This way, you get real emotions in play. That would be practice. Members, here's the options. It's not bearish. So the bulls have an advantage, a tailwind. Box disappeared. Some stuff is going on in the back of the house. All right, I'm not reading comments. I will get to the comments later. Today has been super busy. Oh no. Third time. If you're expecting a whoosh below the lows of today, I think you're expecting wrong. For the same reason, I don't expect a super spike. I don't think you should expect that. Whoa. My camera is crazy. I told it not to follow me and it wants to follow me. Excuse the mess. I know I have something on here. I was recording videos overnight. I was traveling for a week and the office is okay. It's not very messy, but I do have some stuff here. So there's definitely a delay, at least 10 seconds. Slower moving trades, we have plenty opportunities. A curiosity trade, Palantir. What do I mean? First of all, disclosure, I am no longer short that guy. It can go to high heaven. I think 110 price to sales is a joke. I think people buying it here better get lucky. The P&L is very impressive, not nearly as impressive as the stock. The stock was like in the 40s not too long ago, and now it's 200 almost. It's insanity. This is an amazing P&L. Very few companies have ever done that, but the stock price ascent is more amazing. That's the beef. This rise in the stock price is way more amazing than this rise in opportunity. It's priced 110 years. So if you buy one share, you're giving them credit for 110 years worth of sales. I'm not short. I don't plan on shorting it either. Yeah, definitely. So here's the situation in this room. We meet up all day. We spend all day tracking the intraday opportunities for fast traders. We also discuss slower opportunities and we write those up and send them in writing for people that are not here. We do this every day. So at the open, we do an iron condor and then we trade the day up or down, whatever tickers we want. Mainly on the screen is the SPY because that's what everybody's interested in. We do look at the QQQ. This is the QQQ factor. And I'm watching NVIDIA. This could spoil the day. The score is greenish. You have greens on the 2000 stocks from this group right here, the small caps, Russell 2000. And then you have a reddish score from the S&P, even though it isn't. There's a lot of green, but few big red boxes are kind of mucking up the look. I think this one, the NASDAQ, is the one that could be in trouble today. Could be. Powell may bail us out. We'll see. I'm interested. That's a high-level game of chess. The membership fee is a joke. It's so low, it's a joke. I give you 10 hours a day, all day, every day. We answer all kinds of questions, education every day. This morning, we had an in-depth lesson on iron condors. And I mean in-depth. Yesterday was iron butterflies, and I mean in-depth. Every once in a while, we hit all kinds of spreads, like diagonal spread, calendar spreads, vertical spreads, when to do this, earnings, you name it. So we have people that have been with us for 5 to 10 years. You can't fake performance for 5 to 10 years. So we are independent from you know who. Great timing. waiting on a delivery. Had to pick it up. So the opportunities here are to learn and to trade, and we don't take trades willy nilly. Everything has a plan. Every once in a while, we have a fun trade, but it's still not willy nilly. Earnings season is always fun. We do well with that. So I'm looking left. This is where we failed twice overnight. Failed, I put that in quotes. That's where we found some sellers. NVIDIA is stabilizing. Meta has stabilized. In case you missed it, Meta had an incredibly wild day already. Watch this. We'll go to 5 minutes. Look at this candle. That's today, all by itself. For some reason, they freaked out to 645. They loved it at 664. And then they went somewhere in the middle, and now they're still a little bit lower than the middle. But if you look left, the telling point on Meta is that it's in the hands of the bears. The sellers have an advantage. You can see lower lows and lower highs. I'll give you a second before I point out a level that you should focus on. What about this? So this was a pretty valiant effort yesterday, as was this. Okay, so is this the next one? And this is a killer candle. What's it going to take to beat that seller? All right. So that is a problem for Meta trades short term. Zooming out, you can see that it has support here. And look, there are no coincidences. Check this out. Gap filled to the penny, fair value gap to the penny. To the penny. That's crazy stuff. Markets are very accurate. Okay, so that was Meta. What else was moving? Amazon, also having a good day, but because it had a few bad days, so it's recovery. It's in recovery. I would not start calls here at the risk of missing out. The yellow line above us at 684.50 has been pivotal all of December. We have just as much action above it as below it. We did that yesterday. In case you want to see it again, we'll go here. We'll go 30 minutes. Take out all the lines, and I'll tell you where it's at. So that's December, right? If you're looking at my screen. Okay, so we had a top at somewhere around this zone. And we had just as much action. It was resistance, and then we broke out, maybe. Yes, we broke out. No, maybe. We're still trying to break out from that yellow line. Okay, so that's the big picture. That's that yellow line right there. We're going above it. We're going below it all of December. I've done well with the SPX. This AM I was going to say I want to take the SPY call willy-nilly. Okay, so you want to bet up on the FOMC. I can't stop you. If it's foolish and it's costing you $200 and it's part of the money you made in profits today, I'm fine with it. Somebody's asking permission to take a call, bet on an upside reaction. So they're betting on the direction of the move. I don't know why we would move up, but seemingly these days, this year, when in doubt, up is the right is the right direction. I have confidence I can trade successfully the move. Like if we move up, I know what to do with it. If we move down, I know what to do with it to make foolish money. You feel like you want to put some money in calls ahead of time or in puts ahead of time, you're betting on the move. You could make a lot of money right away, or you can lose a little bit of money. If that little bit doesn't ding you, fine. Like I said, every once in a while we'll take foolish money. We don't always have setups like today. So here's the setup with the Fed. The Fed has a decision to cut rates. Everybody expects a rate cut. The first hiccup is, will they? I think they will. They're too chicken shit not to, excuse my French. Bitcoin. So they will cut. The question is, what is their tone? So they're calling it a hawkish cut. The fact that they are calling it a hawkish cut, that means they're already bracing for some negative tones. So that's already somewhat priced in. If he doesn't come out more negative than they have imagined, we will have a relief rally. It's like, okay, it's crappy, but we knew about it, so let's move on. If he comes out really hawkish, what does that mean? If he says something like, we cut, but we're done, that means he changes the expectations of the next cuts multiple. They might have an issue with it. So, no cut, disaster for the bulls. Cut and somewhat hawkish, positive reaction. Cut and very hawkish, negative reaction. So the odds are against the downside. The easier guess is up. So if you're guessing up, still a guess. If not 50-50, 60-40, it's still a coin flip to me. But small money is okay. Maybe you do it in a way that you leverage today's high implied volatility. Maybe you make your bet for tomorrow. You buy a call for tomorrow on the SPY and you sell a call for today against it. This way, regardless of what they do today, you're going to have money coming in from the call you sold dying in your favor. Whoever buys the call for today loses money. Maybe you sell a strangle, but you already sold an iron condor and you did well, so you have your cash from that. Keeping it simple, the KISS method, keep it simple, silly, is always okay. Okay, another point of contention. You remember I said this yellow line at 684.60 matters? Well, this yellow band matters a lot for 30% of the S&P. This yellow band up here, that is the equivalent of that yellow line here for the top 7 companies on the planet. The 7 largest companies, not the Magnificent 7. I would count AVGO, not Tesla, in here. So we're looking at NVIDIA, Apple, Microsoft, and then we have Alphabet, Amazon, Meta, and AVGO. They are also fighting for supremacy around a line that I've been going back and forth for a couple of months. This is a great idea. I will wait. Yeah, but if you want to play for fun, I mean, go for it. I don't want you to miss out. They report tomorrow. That's insane. That adds to it. I take it out. It's part of the 7. I'm not trading it, but it's part of the 7. They report tomorrow night or morning. AVGO. That's a good heads up there, Ryan. Thank you. Tomorrow night. Excellent. So tomorrow during the day, if you become a member today, you can be with us tomorrow. Heck, you can be with us today all day. We will look at the options. Options have great clues for earnings. We can't guarantee results, but we definitely have clues that are better than the average person out there. Let's check on the options. Not a bearish, no bearish, no sellers, very few sellers out there. Don't hold the put. There's not going to be an easy dip. If it comes, it's going to be short term, short-lived. So if I'm holding a put and I'm down 25% and I get a dip and I'm only down 5 or 8%, I would exit. That would be the concept. As long as these bars are green and larger than the red ones, it's easier to drift up than down. That's what these mean. And I have news for you people. Unhindered by a headline, we are establishing a target of 684.45 to 685.40. Target 1 and 2. So I'll put them. This is target 1. And somewhere here is target 2. As long as we're above this orange box. I freaking hate it. The market is so one-sided. It is rigged to the upside. The minute the ETFs are approaching a sensitive area that would just make a lower low that is high profile enough, magic headlines come out of nowhere. Regurgitated, fake, real, doesn't matter. Magic headlines bring out green ticks, boing, we bounce off of them. We are delaying the inevitable. We can't just go to high heaven. Micron is making a good move. Why is Micron on my screen? I don't have anything related to Micron trades right now. Okay, I need to get that out of there. What would we replace it with? Industrials? Nope, I have those. Bitcoin is up there. Crude's here. I don't know. I don't have any need for anything. The account is still green, which is weird. That means these sold calls are not hot. Oh, okay. I have an iron butterfly set for a lot lower than here on the NASDAQ. The quotes on it, crazy wild, like crazy wild. If the NDX, the NASDAQ actual index, if the NDX drops to 24,000, we are 1,500 points above that. I would make a fortune, and I'm not risking a lot. That's the idea of a lottery ticket through an iron butterfly that is set wrong on purpose. When we had a dip recently, the price went to my price, and they gave me no profits. And now they're showing me $500-$600 of profits per contract. I'm going to call bull on that. I'm going to send an order to close it. And let's see if they will fill it. Close position. Yes, please close it. Show me. I dare you. Yeah, I'll let it work. I would be shocked if it fills. That might actually true it up to change the price. Okay, now the price is moving. It's below my asking. So now it should have filled. The quote is below what I'm willing to pay to close it. And it's not filling. So clearly that quote is fake. So I'm cautioning you, what you see may not be what you get. It's a term from the 80s, WYSIWYG. This is not WYSIWYG. Microsoft is paying me a lot today. I'm not so sure why. I am short Microsoft, but way out in time. Holding puts in the XSP, they're profitable, 10%. I'm not moving that bad boy. I'm short something called VOO, some form of S&P Vanguard, blah, 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 blah. I don't recommend it. Extremely difficult to get fills in it, but I'm addicted to it because it gives you a headache. It gives you a headache, but then it works out in the end. So if you're willing to deal with it, my dogs are going crazy. If you're willing to deal with it, then you trade it. V as in Victor, Oscar, VOO. I caution you about trading it short term. Every time I trade it, long distance. Like I sold these December calls months ago. So I am more than 60% profitable in them. What does that mean? Months ago, somebody said on green days, somebody said, we're going to said level. I'll say, I don't think so. I sell them a call. They buy the call. They've lost 60% of their money. I can pay the rest of the amount left in the value and get the bet off and lock my profits. If I do that, I would launch them out in time higher. And I would basically roll the profits. I intend on doing that this week. Okay, so what do we do here? Here's a thing to think about. How many here, raise your hands to yourselves, are long stuff? Long calls, long shares, long indices, long this, that, and the other. I bet you most people out there are long this, that, and the other. Members have heard this to death. They're saying, yep, 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 me. You don't see it, but we have 150 people hanging out in the live room. We're just streaming delayed to Twitter and YouTube right now, courtesy. So the message is there's an easy way to protect your entire account against the holy moment. And I'm not talking 5% dip. I'm talking the holy crap moment. Where did this come from? Like this personality just is no longer in that position, that or the other, or, nationwide blackout for reasons unknown, volcano eruption, halting all traffic in Europe. That has happened. And you know what happened in 2020? All these things that come out of nowhere, they cause disasters, right? The black swan. There's an easy, free trade for that if you do it right. And I'll give you a hint. The VIX is an excellent tool for this. It's not a great tool to profit from a 5% dip, although you can make money. It's there to protect against the holy crap moment. For example, you buy insurance on your car. I don't want to protect the fender bender. I can deal the $500, $1,200 fix. I want you to cover the total. When I buy insurance on my health, I don't want to cover the doctor visits. I want you to cover the, God forbid, I've got this that runs the bills into the millions in 2 days. That happens. And so if I buy insurance on my house, I want you to cover the replacement total disaster. I don't want you to cover me having to fix a wall because my dog ran through it or something. So that idea, the VIX is an excellent tool. And if you have a few minutes, like inside the live room, I can tell you more about it. But the simple concept is when it's cheap, and it still is cheap, I would set myself up with longer dated at the money calls. This is enough information for you to act on it. Longer dated, 2 months or longer, at the money calls. Consider it renting insurance. I buy insurance on my car every day, every month. I'm wasting the premiums. Not once do I say, oh man, I wasted my insurance. Because if I hadn't wasted my insurance, it means I crashed my car. So it's okay to bleed some losses in the VIX if it's covering your entire portfolio. If the big news event happens overnight, the market is down 200-300 points, you're losing thousands. Your VIX calls are bringing you thousands to offset the losses. That gives you enough time to jump into your account and act as if you had acted the day before because of this minus plus. I don't buy enough to cover my entire portfolio. I just want to buy me time. That's it. It's triage time. At these levels, it also doubles as a pretty darn good way to short the market without a lot of risk. You buy a put on the SPY, it gets dead if you have one green day. You buy a call on the VIX, which is also bearish. The market can go sideways, up and down for a month, and you'd still be a little bit of red, a little bit of green. The last batch I bought is down $70 per contract. It wasn't down 2 days ago, and it won't be down if we have a minus 1% move in the stock market. Just to give you like a tangible, and they're out 70 days from now. Okay, so the options are not very bearish, not very bullish, and not very bearish, but they're definitely more bullish than bearish. If you bought the put, you're not losing any money. You're back actually making $5. We bought it for 180 or 185, right? So why not sit in it to practice your emotions? Slow trade. We're not trading super fast. I'm not saying get out, get in, get out. No, I set it up. I told you they might pop a little higher. I drew it if they might pop a little higher and come back down. And that's what they're doing. The question is, do they come back down to 682.50? They need to. They left some open candles. If you're new, these 3 boxes that you see, you only see 2 of them. There are 3, trust me. The 3 amigos, these 3 boxes, have been here 3 weeks, guys. And let me clue you in. The yellow one was the bulk of the action. The 2 above and below it were wings. So we said we were going to ping pong inside the yellow one until we break out or break down. We broke down, we bounced off the red and get back into the yellow. We broke out and went way higher. And now today, we use the blue one as support, which means now the bulls have everything they need to level up, except courage. This is the biggest chicken bull I've ever seen. And at the same time, this is the most mad bull I've ever seen. What do we call them? Cocaine bulls. They're hopped up on cocaine. Go watch the movie Cocaine Bear. You'll understand the term. We don't get paid for referring people to that movie, by the way. I did promise a friend of mine. Oops. Come over here. I do have a few free cases of this energy drink. If you're like me, you like energy drinks, proballer.com. This one is on the mild side. If you don't like energy drinks like this guy that makes you edgy, the other one is not jittery. It's like a good balance. At least the diet version, the one that has 10 calories. The one that has 60 calories, I hear kept people up for 2 to 3 days. You know who you are. 682.6 SPY. Important. Oh, great. Now YouTube will, you say, you got to declare it. It's a friend of mine. I'm not getting paid. I swear. I just got 2 cases. So today, if we lose the lows of today, the same upside target, that X and that line, are there on the downside, which would put us at the bottom of the yellow box. So the upside target is sidelined a little bit. It's not erased. It's just sidelined. We're back to the starting point. They did well not to break out from the overnight highs. This is so far today, perfect price action. Look at it. Chop inside of a predictable range, not doing anything outrageous. There are some stocks doing outrageous things, but in general, we're not. Please keep your eye on NVIDIA. Yesterday, I told you this was target 1, target 2 is 179, 178, and now it's 177. It is a moving target until they hit it. It's a wolf wave. The faster you hit it, the better for you. ETFs are on the move again. Let's see who. Nothing. A little bit of everything. 683.50 needs to fail if the bears are to have a chance. Will we? It's iffy. We should, but it's iffy. Look at the all the support from these green bars. Yes, that was you. So, let's talk slower trades. This morning, I shared some ideas like Zoetis, Netflix, Zscaler. We looked at that yesterday. I don't love it, but I'm okay with it. Vive, not for me, but definitely falling into a support zone that extends through 207-ish, 212 to 204. CoreWeave is a hold for a long term. We bought the dip. You should be making money. Boeing, I'm not long. I'm short. Well, I won with a short multiple times. So today, this week, on greens, I'm going to reset shorts in Boeing. I like the company. I went long everything, by the way. When people were selling, I was long, long, long. And now that we are in the stratosphere, I'm shorting all the extended things. Boeing is shortable. Spotify, I don't short. It was a buy the dip moment. You might have a better entry point in the 480 area. Coin was a buy the dip, but this bounce makes it pretty close to target 1. So I think coin will have a problem at 290 plus. So be careful. ARM. Okay. ARM, I would feel better if it's at and above 155. If it loses 124, I don't know why it would. It might go to like 108. Be careful. Alpha was a buy the dip moment. Still might be available for a long-term swing. Kava, same. I don't like restaurants though. I don't like retail. Axon was a buy the dip moment. It has no competition. But now I think, okay, so it gets to 660 or 680. I don't think it can go above that for a long, long time. We'll see. It has to change its income statement tremendously. MSTR is a buy the dip, and we've talked about how you can go long without even sweating it. Team, buy the dip cautiously, swing trade opportunity. Like it could be weeks and weeks and weeks. Now, I believe I sent a credit put spread, which is working. ADP was also same. Buy the dip for a swing, but I don't love it. For some reason, every time I hear the term ADP, I'm not kidding. I picture a 9600 baud modem. Don't ask me why. I must have had an interaction with them. And then the next word is ISDN. If you're old, you know what I'm just saying here. It's just an antiquated company in my head that might be far from the truth now. So please don't trade it that way. Garmin was a buy the dip moment. Not anymore. I'm going to delete it. GitLab was a buy the dip moment, is a buy the dip moment inside of a support zone as an investment swing trade opportunity that works. I think that's Sentinel. I don't know much about it, but if you know it, be careful. If it loses 13, I don't know where it goes. So I guess it's a low dollar that you can sell puts to own shares at. I haven't checked on the premiums. If you can get in with break even at or below 11, outstanding opportunity to start. We just ran through a bunch. Walmart is changed tickers. Now it's in the NASDAQ. The day that came, like, what? Who would have thunk Walmart would be a NASDAQ company? But it is. We're short EEM, not working yet. It did work and then not work, and then it did work. We're short XLV, it's working. Home Depot, we bought the dip. Fig, we bought the dip, not working. Hood, we bought the dip. It's too late to do anything. Berkshire, we shorted, we won multiple times, like multiple times. CRM, we bought the dip, it's working. Too late to go long with confidence. Goldman Sachs, shortable, I'm not touching it. KO, you know the story. Ooh-wee, did we win with that one? Not here. Teradyne is shortable. We'll move tomorrow with tech. Lam Research will move tomorrow with Broadcom. You can't short this one with conviction because if they break out, they're going to 184. Cisco, definitely shortable. Look at this P&L. That's an amazing company. But look at this P&L. Flat as a pancake. Look at the stock. What? The stock price is better than NVIDIA. On what freaking planet does that make logical sense? That alone is a thesis to short or go long NVIDIA. I'm saying it again. If Cisco is worth the money up here, NVIDIA should be much, much higher from a chart perspective. At least it's only 5.5 times sales. That's not so bad. PE is 30. Not so bad. Great company. But this price action, you think they're going to double their income or something. We shorted Allstate with tremendous results. It was more than the double. It may have been the triple, the premium. I know we bought the puts for like 400 and they were 900 quickly. And I haven't checked recently, but I'm out. I think I got out at 860-ish. That's it. That was a quick rundown. This is a little bit too high for my liking to be holding a put, but the opportunity is, check this out. If, first big if, they are able to bounce here and then lose it and can't recover, somewhere here. Let me double check the measurement. So this is a fast trade that says don't be holding calls with confidence. Yeah, that works well enough. Okay, so if you're holding a call, you should be aware that there's that potential path. Okay, so this guy may change things. Look, they've inched above this big yellow band. Behind who? Apple. Apple is a safety trade. As we approach Mr. Powell, money hides in Apple. This is a habit they can't break. So if they sell tech companies, they hide in Apple. Costco, whoo, dang. Is that an opportunity in Costco? Uh-oh, I'm going to put an alert here. You don't want to lose that tick. It's not the end of the world, but it confirms for the algos. Actually, I should lower that. There's one right behind it. $865.8. You don't want to be there on Costco. Sam, as that triggered, it doesn't look finished. You need a spike to trigger that. All right, let's see if I can. Do we have any comments? I don't know where to even go look on X for comments. Oh. No chats? No comments. That's okay. Less work for me. Iron Condor from this morning. The credit put spread, the bullish side, is at 50% of the gains. They've already materialized. The credit call spread is back to the original value. So you have a quarter of your gains already materialized. So they're going back and forth. As we approach the event, implied volatility should build in the S&P. Surprisingly, unlike earnings, when the earnings come out and the bell rings, the implied volatility in that stock get deflated right away. Like they drop quickly and they continue dropping. I've noticed that on Fed days, at least of late, the implied volatility of the SPX holds its value pretty well. Unusual. This is where the mega caps have an opportunity from today. They failed here. That's fourth time they get here. So eyes on Apple. Apple has a fail at 280 yesterday. Apple, I usually say it's a short up here. But if they finally listen to me and they want to tell Tim Cook to step aside, that should launch the stock. Apple is an amazing money making machine. It's not for me, the products, but they are amazing. Does the SPX hold the implied volatility after the Fed? I've noticed that, yes, it holds the implied volatility. And maybe it's the gamma effect. So as we approach the end of the day, the rate of change accelerates. So maybe that offsets the death of time, theta, decay versus the change of the change speed. That's an observation. I don't have mathematical proof of it. Okay, let's see what we can do here. The bears have another 10-20 minutes to bring us back down to 683.20 or lower. Otherwise, you're at the mercy of, hey, we're on a ride to get to 684.30 or 685.40. We'll see. The ETFs are less hot right now, but the rotation is going on. So this is the third poke on the small caps. If I put the IWM chart for you here, up at the top. This is bearish. Everything red here is bearish to the tune of, okay, we may drop to this level. It's nothing outrageous. But if I go to 10 minutes, you can see how many times they've tried to poke out of here. Oh, 4 or 5. So this is what they call, oh, it's flagging. Yeah, it is. So if they make a new high, what have I said on the IWM? They have a huge upside potential, which makes it illogical. Because if the IWM has a huge upside potential, that means the S&P has to follow 8 to 15% from here. And it's imminent. And there's no resistance. That means it happens quickly. Can we do it? I mean, do we have enough room in valuation? Like, I would imagine Apple needs to be 300, Nvidia needs to be 210, AVGO 500, Microsoft 600, or higher, high fives. Meta, who knows? Amazon needs to make a new high. It just seems mathematically impossible to sustain that level. They're already extended. The S&P is already whatever X% of its normal value. It's already stretched. RSI is this. What happens to all these metrics? It just doesn't make intuitive sense for a mega breakout. So maybe it's so easy, it's not going to happen type of a statement. We'll see. I'm just speaking logic. I don't have proof of anything, right? I do have proof that if the IWM breaks out, its upside is 12 to 25%. It's a measured move. You just put a ruler and put it up above it. 10 to 12 to 20%, let's say 10 to 20% of upside in the small caps. The olden days, the main indices follow, but at a slower pace. Like for example, for decades, if the S&P is up 1%, the IWM would be up 1.3%, roughly. So not a mathematical thing you can use now, but the logic. Like it moves faster and longer. Like for example, there'd be days where the IWM today is green, right? Let's say everything else is red. The IWM would stay green. Come on, let go. And if the other two don't come, the IWM flips and heads south. Of late, they're able to close one day like that. They call it rotation from tech to small caps. Rotation doesn't last too long. Rotation is a temporary thing. You sell A to buy B, you sell B to buy C, and you sell C to go back to A. And that's a fast cycle. You don't sell S&P and buy IWM for a week. That doesn't happen. I have never seen it happen. They don't want to let go of the opportunity. Why should they? They have all the buyers they want in the options. That's a tiny little flag whose target is that orange line. The orange line is not that big a deal, right? But it launches a breakout off of this guy who has that upside target. That's how you can justify that. And the opportunity is to retrace that green thing. The put we talked about is down 4 cents, 4 pennies. That's $4 per contract. I would stay in it or get out. But if you want to practice some reds and greens, stay in it. If this is your first day trading fast and you have an account that allows you to buy a put, look how long we sat in it. Look how slowly we got into it. Look how not dead it is now. It's just hanging out. Why not continue feeling its effects and see if it can teach you something? Cheap lesson, $30. It's $183 now. Let's say you lose $40 because we go from where we are to $685 or $50. It was a $50 lesson. You got engaged. Now you know how to do it. Next time you get into the room, you say, okay, let me take it a little bit more seriously now that I know how to click the button, now that I've seen reds and greens. Like right now, you're back to greenish. Earlier, a little bit reddish. Maybe I get lucky again and that green path works out. Let me see if I can stabilize this camera. Stop following me. Yes, it worked. Sometimes it doesn't work. Let's check. Yep. I didn't even check my hair. We just went live. We are trying to establish this little range that we used earlier, the two white somewhat circles, as support. I don't think we have enough. Let's see. Eyes on NVIDIA and Microsoft and Palantir for different reasons. Costco, man, straight down. Costco is a good investment as a company. If I'm long, I'm not getting more long. It traded pretty fast. So the question is, all right, is this a top in the market or not? Let's address it using this chart. We have had a seriously positive channel by the dips higher high, dip 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 no higher high, dip lower high, dip lower high, dip. What's different now? What can be different? It might make a significant lower low. That hasn't happened in over a year. So tops are not that. They're a process. You stop the ascending channel, you consolidate. You beat the consolidation, you double your rally. You don't, maybe you start selling rallies 2022 style, 10 months. Pop, lower low, pop, lower low, pop, lower low, pop, lower low. We don't know what kind this is. We're watching to see what happens here. Oh, you guys on YouTube can't see what I'm drawing on the screen. Oh, well, you could have followed with my words. People in the live room, tell me what you're trading so we can trade something. All right, so this can is sitting in front of me. I'm going to open it. The credit call spread has not lost value. If you want a visual of it, this one has not lost value. This one has. Half its value is dead. So bullish language is positive. The market is flat. Why would they erode the credit put spread and not the credit call spread? They're positively biased. Like I said, when in doubt, guess up and you'd be right, right? That's what the options are predicting, up. Meanwhile, we draw lines and they follow them. I'm just saying. We do this every day. When I record my screens, usually, and when we tell people what we do, they don't believe us. But then you show them the video, they go, huh, how about that? And then they become members and they never leave. We have very low attrition. Intel shares fall after lawsuits claim U.S. chipmaker aided Russian weapons. What? Intel. So, no, I'm not going to go there. Intel was a bargain at 20 or lower. We said if you want a speculative bet like Lucid, buy Intel stock and sleep on it. They are still a beast in installations. They are everywhere. I have 3 computers around me with Intel inside. Remember Intel inside? Okay, we're making $15. Let's see, 1.83 I think was the price. Yeah, $16. The point is we're making money, and the point is look at how accurate that green line is. So it was a scenario that we were aware of. So if we had calls, we knew that was going to go on. So how does that help me? If I was holding calls, I would know that that's a possibility. So I was like, oh, what's going on? I knew that was a possibility, right? If I was holding calls. So I would know what to do here. I don't exit here if I'm holding calls. I exit on the bounce. I don't exit if we get into the white circle, the lower one. I exit on the bounce. So then you're prepared as opposed to winging it. You have a plan. We literally drew the plan. Raul, that's normal. I already said that. The credit put spread has lost some value. The credit call spread barely. Because we are building tension as we approach Mr. Uncle Jerry. Does that put the algos? Jerome Powell, Fed, management, Palantir. What buzzwords do we have? Give me a stock name that's hot. CRDO, CoreWeave. I wonder if they're listening. Hell yeah, they're listening. I have some stories that will blow your minds as to how your phone, not just listening, it's watching. They are watching. I didn't think that that was a thing. Your camera is sending feedback. I'm very positive. You want to hear it? Here it goes. Roll a little song about it. You want to hear it? Here it goes. Name the show. Okay, something went into my garage. An item I have never known existed. Never have I ever had the need for one. Never have I seen one, said one. I don't even know the name for it. It showed up into my garage. I'm in my garage often with my phone. Within 2 days, the picture of said item shows up as something to buy on Walmart or Amazon. I promise you, there is no way I was the profile for that thing. No way. So I know for a fact they have access to my camera, or somebody in my family may have been attached to something of that items, and then they connect the dots as to, okay, this person hangs out with that person. Maybe if we tell this person about that thing, that other person who is really our target can see it. It is unbelievable. The level of involvement is unbelievable. But I didn't discuss that item with anybody around me. So it showed up in my garage, and then it left my garage. Nobody's talked about it. And there it is, advertised on my phone. That's crazy stuff. I mean, that's illegal, but you can't prove it. Oh, I promised you I would take out the coloring from this so we can see what the hell is going on. So this is the drum roll. If we lose that little low that we made, we will get down to the second leg of my green doohickey. If you think we're going higher, this is your call entry. What call would I buy? I would buy the 683 call. If I think we're going to go to 684.20, this was my call entry. Okay, up here you buy it, you're going into prior fail, not very smart. Down here you get that call for 30% cheaper. I don't want to buy a call. I think we're range bound until Powell. Like yesterday. Yesterday was a dream. Right? I'm not sure why I'm caffeinating myself more, but there we go. I'm already jacked up. So on the way up, they left an open fair value gap at 682.6. Believe it or not, it's exactly where I put the last triangle on the way down. So there's reason to go there. And believe it or not, 682.2 also is a range. So let's split the difference and say there's potential of 682.5 that will cover both lines, plus or minus. Oh, then skip it. I'll tell you all about it tomorrow. If you've got somewhere to be, no problem. We'll cover it. It's being recorded live. This is a drum roll right here. They fought over this line. They have reasons to go lower. We'll see if they have reasons to go higher. They don't, not in my book. And Apple will have something to say about it. The ETFs. KRE, please watch the KRE. I know it's silly. Watch the KRE. I'm being quiet because I was checking voicemail one, and there's nothing to say. We're watching the battle between the leaders earlier and the somewhat wannabe leaders now. These are the ETFs. These are the mega caps. The chief mega cap is looking a bit sick. Okay, let's be a little bit more specific. I love this job. Have I said that? So Apple, look at that red harmonic played out, targets 1, 2. Now you can replay the targets 1, 2, but they might want to reach for 279.8. So I'm not trading Apple. I'm trying to forecast which one is going to impact the stock market. This is the sick one. So if I had, believe me, I have a lot of bulls in the room. If I showed somebody this chart like this, and I said, just tell me what's going on. Ooh, Nick, it's flagging, meaning it's going to break out and go up here. Well, this is NVIDIA inverted. This is NVIDIA today. So yes, it's flagging. And if it makes a lower low on the day, NVIDIA will be at 180. Oh, thank you. I just saw that comment. So NVIDIA could be a lead balloon today. If we look left, there should be plenty of support in the low 180s right here and backup support. But, it's still a lead balloon. Uh-oh. Thank you, Laurel. I wish I can show you what's on this monitor. One of these days, I'll make the monitor movable and move it over to here. The group is very active in here. This is a tiny lower low. Could be a bear trap. Let me check behind me. I don't see reasons for it to be a bear trap. So behind me is also streamed on our Discord channel. Yes, we do have a Discord channel. It's a premium channel. And we stream a lot of stuff. So that's order flow. I have a copy of it here, so I don't have to look behind me all the time, but that's a small version. Too small for me to see. It's easier for me to turn around. Yeah. Here's a place people don't put monitors that I do. You should try it. On the desk. Right on the desk. If you're old enough, I got that idea from back in the 80s. Back in 1825. They built, when everybody used only one monitor, and a lot of paper, they built desks where the monitors were fat. They built desks where the monitor sinks inside the desk and just see through a glass cover on the desk. So your keyboard is up here and the monitor is under the desk, but see through. So now the monitors are 1/4 of an inch. The portable ones, the $80 ones from Amazon, if you put 2 on your desk, they'll be like 2 little things on your desk, and they're slightly slanted with a 3D printed stand. You can have two small monitors in addition to whatever big monitors you have sitting on your desk. All right, so now we're getting a green M. The targets 1 and 2 are that white large circle that has been so pivotal today. And as long as they hold 682.7, below that, that green M is rendered somewhat useless or um, invalidated. So my take on that, with all due respect to everybody that trades harmonics, you can still use it. Just shift your expectations down. So the shape stays the same, the targets move. Okay. If you have traded harmonics, you know what I just said. If you didn't, I've got a date for you. End of January, Florida, Orlando. 2 days, crash course in charting. You will change your life forever. Right, Corey? Right. That was smooth, right? Smooth. Just like this one. Smooth. Nick's on fire today. Oh, no. I poured drink over my Bitcoin. Hopefully that's food grade plastic, which it isn't. That was PLA plastic. So that cup is done. I do have another one. Never fear. There we go. That was a dumbass move. Okay. Yeah, don't 3D print stuff you use for food. Like I see people 3D printing funnels and things like that. Make sure it's food grade plastic, which I can imagine is expensive. Filament. "3D printing is great. A lot of fun. If you have a DJ Osmo 3, you can print this little bad boy. I think they charge $25 for this. Maybe it's $1.50 in plastic. This is a drum roll moment. I'm going to bring your attention to one candle on the chart. Let me take out all my lines. See if you can find it. Train your eyes. Give me the time frame. Look at my time bar down below or match it up on yours. This is 30-second charts. So if you have different time frames, it might look different at a different distance from current price. Make sure to match up the time frames. Are we ready? 8:15. Let me go to 8:15. Who said that? 8:15-ish. Yeah, it's this one right here. I think this whole battle is this candle right here. So yeah, you got pretty close. So they did half the green path that we drew, right? We thought from here we could drop, bounce, see if we can do that. They did half of it. Will they finish it? Let's see. They should hold 683.15 if they're serious about it. There is no open gaps below that until you lose that last bounce at 683. So right here, they already went 5 cents too deep. Let's see if that means anything. I'm splitting hairs. Maybe this is not that kind of day. Maybe it is. We'll see. These guys are running out of steam. These guys are giving up the spike from this morning, so I wouldn't classify it as running out of steam. Drum roll. I wonder if that voice changer works on Twitter.
Does this sound different? I know it works in the live room. I don't know if it works on Twitter. If it does, you're welcome. We do jokes too.
Not good ones, but we still do them. Ragu does good jokes. Can done. Done. I'll transfer your information over. So many things going on today. Oh, I heard diesel. Late start today, huh? That bounce is violent. You see, they know what's important, what levels are important. Let's see who did. Okay, it's one of the ETFs. Total coordination, 30-second harsh bounce right there. Healthcare. I bet you it's probably Lilly. Lilly has been on a selling jag. Look at that. Let's see. Let's go into. Look at that jag on Lilly. That's crazy stuff. Merck, Pfizer. What other UNH? UNH. Humana. It's UNH. UNH headline. Headline. UNH. Blah 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 blah. Right on time. You can only maintain a charade so long before you have to put up value behind the talk. Period. End of story. What, Nick? So aggressive. Hey, I'm being honest. Yeah. Tom Lee, I think we won't hear from him after February. He's going to go dormant for a while. Watch Costco bounce. There's an opportunity to bounce in Costco. Look at that. The put is up $20. Yep. 10%, $20. Hey, money is money. That's like $150 today in per contract. 2 contracts, that's $300. What is your daily target? Oh, not counting the Iron Condor. Drum roll. This is our life every day in, day out. Minus this beautiful mug. I don't usually share my picture to the people in the live room. We won't have 150 people. Nobody wakes up beautiful at 4 in the morning. We don't have the ability to fall far. Look at all these green bars. Those are willing buy the dip opportunities. So we do have support. Alrighty then. Nice. I like the confidence. They're fighting for just to save 50 cents. It's not a huge dip. Even if you follow the path, the next level down, it's about the amount of the damage that would be incurred. It's not that big a deal, but they're fighting it like it would be. There should be a bounce from the mega caps. If there isn't, then somebody is going to let go. So watch Apple. Apple is a safety trade. They run and rush into Apple. I wonder if the XLP is being bought also as a safety trade. Staples, these guys. Staples are a safety trade. Now, the XLV, which we're short and making some money, we bought puts for $270. I was lucky enough on the first week to sell a put for $70 or 2 week put. And so I booked already $70. So now I'm technically up $50 to $70, even though the put hasn't made any money. So I say it's working because the XLV has gone up a lot and has a lot of potential downside. But today, now it just caught fire, and that goes against that put. So if you're in that position, you want to manage how much money you're willing to lose before you call it quits. I said I started a position, I didn't add to it. I still have it in me to add to it. I haven't decided whether I want to or not. I don't like to buy things, I like to sell things. So if I'm able to sell a call, I prefer it over buying a put. Look how violent they are on this line. So now they've said 683 is we can't afford to lose it for some reason. Hey, somebody should tell them it's only 682.60 your target, thereabouts. It's not the end of the world. You keep defending it that harshly, then it becomes a problem. So make it less harsh by just going a little bit lower. It's not the end of the world. This bull is on crack. Okay, so now the NVIDIA target, if it plays out, 177 and counting. What do I mean? The rising wedge from the overnight wasn't that sharp, but the target it slings is very, very sharp. Cut it in half and it'll be 180. If we cut that target in half, it'll be 180. And we already saw that it has support scattered. This is a company that is doing something that is not human in the P&L. Like, I have never seen, nor will I ever see, financial performance like NVIDIA. The improvements in its P&L, the size of the company, the sales and all of that, it's wow. I mean, I can't imagine any other company doing that ever in my lifetime. So right now, it is very coiled. I think it's worth a look all by itself. Upper right-hand corner. Look at how coiled it is after being so elastic today. It wants to pop. Yesterday, it got coiled and it popped. But then it gave it back up. So we'll see. I'm watching it somewhere else, so you might want to put it on one of your screens. And these guys are fighting for the yellow band. So I'm assuming they're going to catch a bid here to trying to stay above the yellow band. Where do you think NVIDIA pops to? This is a very short-term comment. 184. $184, I believe. Yes, thanks, John. I appreciate the effort you do on social media. The market is no bueno at this price. It works on social media. Okay, thanks. I believe that's Pam. Good. Now we can be comedians even on social media with the helium voices. You see how we identified two zones 2 hours ago? There were no ticks at those zones. We said, this looks interesting. That looks interesting. Watch where we're stuck between said two zones. We know our stuff. Simplestocks.com. If you're not a member, go be one. You can cancel at any time. If you sign up for the yearly, it is less than $70 a month. Go find me somebody else that does this. Nobody. You can't find it. Look at this. That is an interesting tick right there. Microsoft is recovering some of its woes. I'm serious about January. Charting class is going to be amazing. 20 people, small event, small venue. We've been there before. They know us. We'll go to Johnny's Pizza. What? There ain't no way. Netflix catches no breaks. This move, that one candle, way too strong for its own good. And check this out. Look how they did that and they're gapping down. What is going on? What is happening? What is happening? They are yanking everybody. It looks like there's a seller on the ES. 6855-ish. Look at the red candles on the right middle. Those are ETFs. Which one? KRE. Watch the KRE. That ruined the day yesterday. The KRE, XLF, they called it JP Morgan. I found someone. Ah ha ha. Harry, that's funny. You do have a pretty cute sense of humor, sir. So Harry is making things happen. He has $1,000 a day goal. He's busy throughout the day. He has responsibilities. He comes in and says, I just got in. What can I do? Can I take this trade for 500? Can I take that trade for 500? And the answer is yes, no, or the other. I don't remember one bad day yet. Yesterday, he fell short of his goal by a little bit, but he made $500. And with one question, can I do this? I said yes. Later, he said, can I do a credit put spread for another 500? I said I wouldn't. Had he done it, he would have made another 500. But for me, avoiding the problem and missing out is fine because he's made more than his goal before days. So it washes out. The goal should not be a must. And then you push yourself and then you ruin your day. All right, so let's look. The put is profitable still, $15. They went back. That was a fake out. People got trapped. If you followed your emotions, you got trapped. If you go to the Instagram and you see our posts that we've done, those 15-second boilerplate Nick talking head posts, just write down the messages. Some of them are repetitive. Those are the non-negotiables, like things to never break. Don't chase headlines. The cheesy statement, you will be one headline behind. You physically will be always behind whoever gave you the headline. It's physically impossible for you to beat the people that delivered the headline, right? Okay. Therefore, you are always behind the lead pack. So you're smelling butts the whole time. You don't want that. You want the lead dog. You want to be the lead dog. So do your own homework. You're good enough. We are good enough. I drew this green thing not knowing headline this or that. I have the opportunity to make money off of it. If I wait for headlines to trade those, I'm at the mercy of somebody else's headline, and I cannot do better than being mediocre. How long will you last? You'll be at the mercy of a news outlet like Zero Hedge or Benzinga. Great folks. Well, I don't know about Zero Hedge. Great abs. I have abs like that. I just choose not to show them. Yep, I'm going with that. Prove me wrong. This live thing, I don't know. We'll see. Am I blushing yet? Drum roll right here, right now. Again, the targets are 682.50, give or take. You owe me a hamburger. Nice, Laurel. So Laurel heard my comment and went short the S&P futures, the ES. Made some money. The ES, if you catch 1 point, is $50 per contract. Okay, we're up $23 per contract. 26. One contract. Okay, so if your goal is $300, how many of those do you need per day? So that's our third or fourth put, 2 call opportunities, not to mention whatever got called from other people in the room. I believe Corey and Ryan, they both called. Ryan called calls on Goldman. Corey was shorting the IWM earlier, and I know it worked. So we did a good job there. And the Iron Condor is still playing. So having a winning, repeatable pattern is the goal, and we have that. So now they tripped the sell, right? They have some time to get back above 683.20 and avoid it. If they can't, then they should come down and finish 3/4 of that green path. I'm waiting to take. Okay, so somebody's asking, should I buy a put? Should I buy a call? Hold on. My coin is all wet. So maybe I can. All right. Call, put. Calls. Harry, I don't know. If you take a trade before the quote event, you're guessing on the outcome. I'm not that good. The odds are it's easier to respond positively unless he really, really says something bad. That's my take. Would you risk $2,000, $1,000 on it? I wouldn't. I think I can make money off of the move. Like if they react positively and they're going into a prior fail, I'll take a put. If they react negatively and they're going into a prior bounce, I may take a call or sell a put spread against it. We'll see. For me to tell you, yes, take a call, take a put, I honestly don't know. I'll show you what the options are doing, and then you decide whose side you want to be on. Is that fair? These are the options. There are more willing buyers below than sellers above for today. We can look at it for the other ones as well. We already looked at the SPY. This is the QQQ coming up, upper right, any minute now. There we go. Same here. IWM. Well, IWM just flipped the opposite. So on the IWM, it looks like they've had enough of upside. That's live looks on options. And it's not a stinking black shoal formula either. Drum roll. I'm really interested. Are you impressed? No one's impressed. I would be doing backflips if I wasn't on camera right now. how the price is tracing our green line. Maybe we should change the color. Maybe people will say, "Ooh, ah, if it was blue." Talk about fishing for compliments. Nvidia is uncoiling itself to the upside a little bit. That's good. Microsoft just did it earlier. Um, Amazon is at risk of going to 227. What? Today? Maybe. 229, super good support for today. 227, potentially a target for the next few hours in Amazon. Again, that's the concept of a rising wedge. If a stock goes from here, okay, you guys on Twitter, you can't see it. Okay, so let's do that. All right, let's use real lines. If a stock goes up like this in a rising wedge and it goes higher than it should, it tends to do that. Some sort of a wolf wave concept. So Amazon has one of those using today's price action, and it's pointing to 227. In the way, 230, 229, those are two support zones for different reasons. Yep. So they're trying to look at that. The buy the dip, the plunge protection team is out in full force. We want to be, the bulls want to be above 683.50 for a lot of reasons. The best of which is that's my opening range, which means your target is 685.20 in two steps, halfway, then 685.20. And they don't know what to do about it. They have deployed all weapons. We have 2,000 stocks doing the best they can. We have hundreds of ETFs stocks here doing the best they can. We have these 7 that are struggling, but they have always had the potential to do unbelievable things. So these guys can come out of nowhere and do the best they can. So we don't have a shortage of willingness to rally. Look at that. How easy was that? Nick said you need a bounce. Boing, there goes the bounce. So now what? Right? Now we have ETFs and companies running at the same time. What time is it? We still have an hour and 10 minutes until Powell. Look at these candles. Whee! Bravo. Apple is wanting to go to 281. In the way, there's yesterday's 280 high poke. I would restart the same put here if I didn't have it. 180, $179. Just for this. I don't think you're going to get rich off of it. Skip it if you're trying to make a living. If you're trying to learn something, you're risking a few bucks. Get into it just so you can get the energy in and out. So $177 to buy a put that may endure this. It'll make you $20, maybe $15, but it will give you experience. If you're looking to make a living, that's not for you. It's not a high. It's too easy to beat. Starting looking at the implied volatility at the same delta as puts and calls. I still cannot figure out. Yeah. That's why I share it. This is a legit effort. Look at that. They're taking out the morning high. They're trying to. And it's everybody at the same time. Let's see. Um, we are flattish markets. We have flat plus 0.08% on the S&P, minus 0.2% on the QQQ, plus 0.14% on the IWM. We are literally flat. It feels bullish, but we're flat. And just like that, the options buyers are overwhelming the options sellers. So the ability to buy dips is on another level. This bull is crazy out of its mind. Okay, so let's do a level check. The best level checks are done, in my opinion, in this guy. Turn off all the lines, go to a 60-minute chart. This is the S&P. This is the big daddy. That's the SPX. No overnight BS, just pure index. This bullishness, 3 days in a row. No, 3 hours in a row. Look at it. Each candle is 1 full hour. That's today. This one, they opened, flashed low, bounced at this candle right there. Perfect. And now they have to deal with these. So this morning, when I said the bulls need a plus 0.6% rally to clear all these prior fails. So I figured 0.6 will clear all these prior fails, and then you're free to make a higher high. We're buying dips, making higher highs, right? Very aggressively so. That was a dip. Let's see if it makes a higher high. We haven't made a significant lower low. We have a gap to 6780, which is my target for today. I think 6780 is in play. So is, say, 6912 or so, 6920. Those are doable today. And there you go. Let's see. This is the seller that was living at ES. They knocked him out. Him, her. I don't know why they're making moves before the event. It just makes it easier to get disappointed. This orange line is a long-term. We've had that up there for a while. I forget what we called it. Let's double check. Okay. Early November, it was a 15-minute significant candle. Since then, it has played the role of support and resistance multiple times on a higher time frame. So it should matter. If I had calls, I would be out. This white line, I believe that was from yesterday. It was significant yesterday, so I'm thinking it also should be significant today. This is target 1 of 2, what we said earlier right here. When they broke out from this orange box, target 1, that was it. Target 2 is where that X is. Oh, that's what those two things are. That was target 1 and target 2. This was not from yesterday. This December, we've already talked about it to death. If I was long a put, I'm down $8, that put, which tells you that they didn't believe the move up. They didn't price it out. You can get out $8 to $10. I will be back. Whoops. Back too big. Too big. There we go. Delivered. Thank you so much. This was a gift. The dogs are like, whoo, we get to attack somebody. The put is down $9. It's fine. Chewy negative again? Oh my God, that is an opportunity. So Chewy has a pretty consistent business. The earnings report was okay, up 8% on sales. But they allowed the CFO to say some words, and the CFO scared the bejesus out of everybody. Okay. If you pull up the ES futures, we inched above the prior high. What is today? Wednesday, right? Yeah. Just poop, a small poke. That one. Let's see if they can confirm it by going back above it. I'll keep you posted. The options are extremely bullish. Whenever it looks like a Christmas ornament, buy the dippers are here in force. So even if we get that white squiggle to play out, not going to pay you a lot of money. So you can close the put if you want to. I wanted you to learn something. Okay, so in preparation for the event, I'm going to type up a few words and then I'll paste them. I believe I have a shortcut for it. See how fast I type? That's pretty amazing. That's not that amazing. Basically, this says that don't get faked out with the first move. What they do is they release the statement right away. Apparently, there's a limit on YouTube how big the comments can be, so I have to break it up. On Twitter, no limits. Typical. Jab, jab, jab. The put is down $7. Totally okay to hold it. If we get the white squiggly, you can get out for some greens. Why should we get the white squiggly? Why not? This move was total BS. They left an open candle at 683.4. Let's see if they come get it. Basically, they still are pivoting over those elongated shapes in white that I drew this morning. They're trying to establish it as support. They have gone above it. This is the best effort, to be honest, right? Okay. We'll see. Oh, I know who brought that about. Freaking, I was like, which one is it? Which one is it? Take a guess. I like the company, but it's starting to piss me off. AVGO. This whole thing was AVGO. That's the 30-second chart. Up 0.7, 0.8% in 17 minutes. Just because it's Wednesday. And they go back down and they make a lower low almost. What? All right, so this collective of mega caps, collectively, I don't care who does what inside that group. If they make a lower low, they're going to accelerate to the downside. That's a lot of heavyweight here. So they better not make that, and or this better step up to the plate. So they need to rotate out of this into that. Let's see who in that group can do it. Those are the ETFs. Let me reset the windows. Okay, everybody's contributing. The XLF is pushing. So if we go into the XLF, who is it? Let's go to 30 seconds to match up all the time frames. JP Morgan making a rebound. Wells, Bank of America, everybody. Morgan Stanley, the bane of my existence here now. Goldman has been strong. Who is this? Visa, MasterCard. The two with the best P&Ls are the weakest. Go figure. Visa, MasterCard have P&Ls that are like out of this world. They're the one lagging. This here is a cup and handle ish inverse head and shoulder. It's a bullish opportunity. We mentioned it earlier today. If they take it, they may pop and drop. So be careful chasing the next pop here without this group participating. They missed an upside opportunity on this group. So now they're in, let's hold the floor mode. We are approaching Powell. 55 minutes to go. What do I mean by open candle? A candle, the fair value gaps. Every candle sequence needs to be complete. You can't skip. Gaps are not how you build. Hey, it's one of those videos I did. You shouldn't skip steps. And I don't mean like a physical gap, like you can find physical gaps here. No, sometimes two candles, like there's a fair value gap in here that they closed. They have another one open. But this is a group of stocks that doesn't work like that in these, but kind of does. Look at that. These guys, gone. XLF is threatening, but remember, the XLF is threatening only to find problem areas from yesterday. And AVGO is helping. Unbelievable. Microsoft and AVGO is like opposite each other, 1-to-1. Check this out. If I put AVGO, 5 minutes is okay. Let me center it. And let's do 1 minute. And I'll add Microsoft. Look at them. AVGO, Microsoft. Short-term comments. That's not a rule or anything. If you have time, you want to study open candles, it's well worth it. It's one of those tricks I picked up in the last couple of years. I learned about it 10 years ago, and I never pursued it. And a couple of years ago, somebody asked me about it here. Hey, have you heard of this? I was like, yeah, I have. In fact, let me go back and revisit it. Glad I did. Not the same answer? Okay, what did Grok say? You can listen to Grok or you listen to me, the guy that's telling you we're going here and we're going there. What did Grok say? Do tell. We have bearish setups on the ETFs. Current unfinished candle. What did I say? The current word is wrong. Grok is 1000% wrong. I stand behind my statement. We're both saying the same thing. It's an unfinished candle. It could be a year ago. It's not current. It's currently open candle, but it could be a year ago. Nope. It's called the fair value gap. It's a study. You can look it up. They'll give you the rules. The concept is candles need to be connected in a way to where if they don't connect, that means there are orders that never filled. And they need to go back there and fill those orders. That's the easy part on that. I'll show you exactly how to do it at the end of January. And I don't need a tool to do it. I'm looking at the chart, I can see them. Pop, 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 they pop at you. So you know what not to do. There are other ways of getting those, and but if you know the concept, it's very easy. It's areas of support and resistance. Like if I see a fair value gap, I don't say let's buy a put if it's below us. But if we're headed down and I see it, I know what they're hunting. I know where they're going to slow down and find support. Man, today is the day. The requests are coming out of nowhere everywhere. Anyway, pretty soon that TV behind me will be a much better one. Thank you. I got a gift. A 65-inch OLED. Oh no, stop. This is not OLED. This is an old TV. So I see a bearish reasons for the ETFs, the ones that brought us up here, this group, that red W. Although this is not one stock, but it's a collective of all the stocks that are in it. Collectively, they have created a rising wedge, which makes the right hand side of a harmonic. It's that red W. Those harmonics say, okay, so maybe we get down to 762. This value means nothing to you unless you have a similar chart. That is a doable thing. There is a fair value gap somewhere in here, but again, that's a collection of stocks, not necessarily applicable. Um, so this is correct as long as we are below this line right here. This purple line, this purple arrow is doable as long as we're below the green. Above the green, then this setup is dead. We'll see. I think these three candles are interesting. Let's see what they do inside of them. I think this green line is interesting, but that's an automatic Fibonacci drawing. I didn't draw that, but I would draw it if it wasn't there. Of course, the lows, the baseline. Let's see if they play out. These are 30-second charts on hundreds of tickers, so if they play out, that would be outstanding. Meanwhile, I look at the put, it's down $12 if you didn't close it. I said keep it to learn something, right? Part of learning is how do you handle negativity? And luckily, it's only $12, but you're still losing $12 and it's not going your way. You're anxious. That is a skill. How can I book a loss? How can I book a profit? Some people don't have that. And you don't want to find out you don't have it when you need to, like when you have 10 contracts. I can't book a loss. Well, if you did it with one contract and then do it again with two contracts, suddenly you're okay booking a loss, booking a profit, leaving money on the table, booking a profit and seeing it double without you. It's all skills. If you want to last, you should be able. These guys are going the other way. So mega caps are stinking up the joints. This yellow band is important for them long term. Let's see if they're able to hold it today. They need like Powell to speak like right now. So I'm confident that this year Wall Street has the inside track on what's coming out of the White House. To say it nicely is there's a lot of people in the circle of legislators this time around. Good or bad, doesn't matter. I'm stating a comment that means we are at a deficit more so than usual. Like people already know what's coming out in an hour. I'm very confident, more than the normal. So that means what? Go with the flow is okay. It means that go with the flow is okay as long as you don't overextend yourself and you have a plan of exit, good or bad. So if you think we're going up, you're not crazy. So you take a bullish position, make it so it doesn't die today. If you take today's positions, you win fast, you win big. You lose all. If you take a position for tomorrow or the next day, you win, you win. You lose slowly. You win slowly. You lose, well, less fast, slower. It's a trade off. And make sure to find your personality. And I would not risk my account. Then that's gambling. Then you will find out yourself being a poker player. Or you go to Vegas and you say, let me put 5 grand on red. Hey, who's the artiste? All right, easy there, fella. What you don't see on Twitter and YouTube is somebody's drawing on my screen in my live room. You're trying to help? Okay, you gave people a heart attack. The other day you did one in red that looked real. Straight line up. Yeah, exactly. Here's today's forecast, which may not be crazy. Today's forecast is deep red if the Fed doesn't cut rates. Like deep red will be like, auga, auga. Highly unlikely. Maybe 2% chance. Maybe. Maybe. What are the actual odds of a rate cut out there? 90%, 95, 98? The odds makers. And you're back to even on the put. You can exit now, no loss. See, we just learned emotions up, down, sideways. We're not being frantic. Oh, you got to close it. Oh, you got to get in. Nope. Yesterday, I added this study right here, that yellow box, that important note, these blue lines. Okay, so what are R1 and R2? Oh, die AMD, die. I'm short AMD for another 7 days. Microsoft gave it all back. Highly disappointing. AVGO looking to break out. So AVGO could be 414 today. It is right now 406. That doesn't mean go out buy a call. It just means that that's the kind of stock it is. It is on the expensive side, but not outrageously expensive. Like between it and Palantir, it's a better bargain. Now, there's a stock, one of these big guys, that has a must hold moment other than Microsoft. So Microsoft can be 474.6 today. Meta can be 638 today. All it needs is to make a lower low. This morning, I showed you Meta crazy candles. Violent sticks down to 645 and a half. And Amazon also has a way deep dive moment coming. Look at the upper right-hand corner. Okay, I told you they need to hold that level, otherwise they plunge. Well, plunge. They extend lower. Did I draw lines? I thought I did. I could have sworn I drew lines. Wow. Okay. I'm dreaming. The put is flat. We didn't make any money on the put. That means they don't intend on continuing much lower too easily. They're fighting for it. You can see some sellers are coming in. Neutral whipsaw triggers. What is that? That's a lot of words for me, man. I can't read it. Thanks, though. That is true, Maria. That is true. Somebody will come out and say something. Hey, remember we changed the rules on the banks, and that's $2.3 trillion of upside. Bye, 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 bye. That's the PPT, the plunge protection team. The fact that the put is not making any money, it's not losing, but it's not making any more money than it was earlier. We still have 40 minutes. It's not like the decision is imminent. What is the deal here? Phew. All right. So that's a dip. Can they make a higher high? I think they need to be lower to close the candles that are open. If they finish that white squiggly, they close all but one candle. 683.25. They close all the candles on this last rip. Thanks to AVGO, who hasn't had a red tick. Uh-oh. Uh-oh. Two uh-ohs. They both start with M. KRE, a new high. God dang it. The KRE, a new high. First of all, I'm short KRE. Small. That means the XLF may not be done rallying. Maybe they know what Powell's going to say. Powell is not going to be super bearish. Buy the dip, buy the dip, buy the dip is what I'm saying. Meta, Microsoft, correct. Meta and Microsoft are about to lose the lows. Actually, Microsoft just made a new low on the day. Okay, so the put is up 2 cents, $2 and counting. We got the move. We made no money. I told you it's hard to make money, but we got the move. So once again, we're back on track with forecasting. We got half of the first move. We got all of the second move after a small detour. The first move being the blue path. Maybe at the end of the day, they're at the blue path. Maybe not. They're going to have to cut through a lot of support right now. Now we have two levels of support. What was resistance? I will change the color so we can speak to it. The yellow oval versus the white oval. We've been fighting for that zone between yellow and white for a while, and then we broke out. This is their chance. This is their chance of establishing, after hitting target 1, of breaking out of my opening range, the orange box, establish it so they can go to target 2. I don't think they can go to target 2 without Powell speaking. So, Harry, if you wanted to sell a call spread, I should have told you up here. But now it's back to even money. Okay, speaking of call spread, the credit call spread from this morning still carries exactly the same value. The credit put spread is 50% gains. Go figure. That drop and no O, it will come at 683.39. That means I have it too tight. I'm expecting violence. It would have come out right here. Watch. See? That X's and O's is very, very useful for trading and establishing patterns. Ooh. Ooh. And Meta, new low on the day. If NVIDIA makes a new low on the day, I don't think this group can levitate this market higher. Meanwhile, 2,000 stocks are at the highs of the day, highs of the year, highs of ever. IWM is an inch away from an all-time high, right here, right now. They're up plus 0.4%. Go figure. The ones with the nowhere near the financial success as this group, and this group is nowhere near the all-time highs. Anyway, pretty bizarre scenario. It's almost like they're buying crap. They're selling gold to buy crap. That doesn't end well. But it is indicative of the risk appetite. And God help us if we are missing one of the assumptions that is pivotal. I'm not going to go down that rabbit hole. You, the members, know what I'm talking about. We have two focal points. Either of those two are terminal for this market, and I mean it. Okay, this is 683.25, give or take a few pennies. That closes all the candles inside of this. Perfect. We mentioned it. It played out. The put is up $12. You can close it. You can stay in it there's something. If you ask long-term investor, I forgot his name, very famous, how do you go decade after decade being a winner? He would say, you guys would tell me what's his name. I let my winners run and I cut my losers quickly. What's his name? He's famous. Hedge fund manager, owner, or whatever. Okay, so now we legitimately have a 10% win, almost $20 per contract. Anyway, so if you want to practice letting your winners run, you let this one run. If we get to the white circle, we will finish the blue path. We have a good chance of finishing the blue path. But we are inside of a very strong support zone. That's what the blue lines, the yellow box, everything says you should lock your profits here. $21, 11, 12% is a legit win. That would be the fifth one. I wouldn't buy a call because of all this red stuff right here. But you can. That blue M wants to turn green. If it turns green, you can forecast a potential bounce, and the bounce could go to 683.40. So if you have the speed, pick up a call at the money. 683 call. You buy it, you risk $150, and you say, I will cut it loose if I lose. Pick a number. I'm afraid of these mega caps falling like that. They are heavyweights and they are lead balloons. Talk about a bull trap. $28 and counting. There we go. Give me my blue path, Mo Flicker. We got the purple arrow. It worked perfectly. Nick, you got lucky. Yes, we get lucky all the time. Now you know what goes on behind the scenes. We're up $40. Thank you very much. Out, because that is a support zone on the left. $40 out. That's like 22% or something. Whoo! Okay, now there are open candles on the way up. I'll put markers. So I'm going to delete the path that came to fruition. That arrow played out. I'll leave it there for visual reference for now. Sometimes it helps us on the way up. Okay, you know what? It's an area of sellers as we approach this yellow, which should have been support. It failed miserably. So I'm going to delete this new area I drew because it's redundant. As we approach the yellow one, it's going to be resistance. And the fact that we're in the process of losing that white one. 683.1 now is a problem. 683.2 is a problem. The yellow is a problem. 683.50 is a short. Here. If you buy a call here at the money, 682, 683. Scalp as you approach this first one. Don't overstay your welcome. I don't think you're going to get it without the help of like NVIDIA. AVGO is not strong enough. We have AVGO, I believe, is like 3% of the SPY. Let's see here, SPY. Maybe tops actually, more on options. 3.2%. When you have 6% combined Meta and Microsoft, actually more, 10 or 11%. Microsoft is 7% of the S&P, and it's falling quickly, 3% down. Hard to offset it with one stock that is up. It's not up, it's flat. So it's hard to offset the negative effect of a 7% lead balloon. Okay, comment on these guys. Up here, I said, careful. If you lose, you accelerate. Same comment with bigger consequences. So I expect a bounce from the mega caps here. If they can't, oh man, is it ugly for them. Yesterday, I went in here and deleted a whole bunch of stuff I don't use. I only have 4 or 5 indicators here, including the volume. And most of these are R's, which include the pressure table. So we don't need many indicators. In fact, we don't need anything except our eyeballs. So now we got 3/4 of the blue path done. Now, will the bulls be able to have a plunge protection team bounce to make a higher high today? If we do, the violence to the upside above that could be pretty phenomenal. So I'll give you an idea. For example, the credit call spread did not lose any premium. This whole drop, the credit call spread is still showing $45. It was $45 when we were at 684. We are a full $10 lower on the SPX. Not a peep on the credit call spread. Still $45. That is a bulled up expectation market. They still, because if you're selling options for today and you're selling somebody a call or a call spread and you expect a rally, you want to charge them a lot. So they dropped more than $10, $12, and they didn't discount the calls one bit. They still are looking up and not down. So the blind side is to the downside for sure. Is he for reals or are you making a joke? He is? Wow, you called it. We have a plunge protection team expert currently speaking to trying to stabilize the market, even though we are not red. We have a flat market. Arguably, we have 2,000 stocks that are up a lot. And Hassett is talking. So I'm going to give you a statement. If we finish the blue thing I drew, I will wear a pink tutu and do a dance right there. No, I wouldn't. I would expect more downside, technically. But in the face of coming headlines, I don't think they will do much. It will be a bear trap to chase it. If you see us make a lower low than 682.70, don't chase it eagerly if you're not short already. Because the blue box, because the purple box, if you're not in this room with us, you don't know what these are, you should just know that these are hotly contested areas for weeks. They tend to be support intraday. It's going to take a lot to breach them. I don't know. I'm not a news guy. My take is I think JP, Jerome Powell, Uncle Jerry, will be friendly to the market. actually will not be as aggressive as people think he will be. I think he will deliver a cut. If he doesn't, it'll be very disruptive for the stock market. And he will say something wishy washy that is somewhat hawkish, but they already expect him to say that. So it wouldn't be a huge effect. If we dip, you might want to buy the dip. If he says we're done until further notice, and somebody says, "What do you mean we're done?" He's going to say combatively, "The jobs report from the ADP says we're doing well." We have a job report tomorrow, no? Or is it today? Someone? I feel like I've been talking for days. Good bounce. If I had calls, I'd be exiting into 683.5. I thought we have a non-farm payroll this week. What was that next week? The one day delayed. Okay, federal interest rates. Tuesday. Good. We have breathing room. All right, algo flow. Where are we in the SPY? 683. 683, there's a lot of sellers there. 675 is the highest gamma exposure from Trady Ticks. It's too far for me to worry about it. Oh, my goodness. Okay. Guess where the highest SPX magnet is for today? Guess. 6920. 6920 by a long shot. 6 times bigger than any other magnet. 6920. I don't know why. I don't see it. The more transactions are at 6,900, which is a round number. Okay, then. Gamma up there is pretty large. Qs, 624. Is that where we are? Yeah. SPY, not a lot of clues. 6920. So be careful being short today. Look at that. They like our little circle, yellow, like touch. Tesla is awfully quiet on a day like today. Very quiet. Look at the size of that harmonic drawing itself. You see it? That big gray M? That will explain 6920. Target 3. Whew. The put is still $25 profitable. I keep mentioning it for context. Guess what? The credit call spread and the credit put spread are equalizing. They are set at 69.05 and 67.55. So the delta on the puts is lower, which explains the differential in price. They're equalizing. So I think they're 50-50 here. The bias is going away in the options. Eddie, you said you're doing some work on that. What do you see? Yep. Take your time. All right, let me check on something here while you do that. This is playing out, right? Look at my target. So this descending squeeze, it's not an official wolf wave. I think the VIX wants to be at 19 or 21 and a half in the next 2 days. We'll see. If it doesn't, it goes back to 15. I will reload VIX. Or if I didn't have them, I would say buy some. This is my magical chart. This chart says we're at 6880, 6900, or 6760 in the next 12 to 20 hours. Every white box is a target. If you don't go for one, you go for the other. Plain and simple. It doesn't say which one we go to, it just says what's possible. Either this box, this one, or that one next. So plus or minus 1.5% on a coin flip, right? Not tradable. It just preps you to what's possible. Make sure your account can take both. Here, QQQ sellers are heavier than the buyers, but that changes. The IWM is somewhat equilibrium. We know what the SPY is like. Okay, so that's the last top hat of my blue drawing. I'm going to change the drawing color again so I can speak to it better than this. Orange. The top hat. Okay, so we did the first top hat. They exceeded it. We did, that's the last top hat. So we're retesting the neckline, 682.7. If we get into the blue box, meaning we trigger the neckline I theoretically drew an hour and a half ago, we will finish that arrow and then some. I don't know why they would do that before Powell speaking. Watch the KRE. Hot diggity. Okay, I got logged out. I got to log back in. Sorry, folks. Yes. Trying to find which screen. Not that one, not this one. There it is. All right, we're back. Every 6 hours, I get kicked out. So that's proof positive for you non-members that we've been here 6 hours. Same pressure level as before to the downside. Okay, thanks. When you say that, you mean they're charging more for puts than calls? According to your calculations? Yeah, the 6 hour kick. Gint knows it well. If Powell has a green tie. Oh, that is the briefcase indicator. Remember that? What's his name? Mark Haynes with Greenspan. I like Greenspan. He could speak for 30 minutes. I have no idea what he's saying. I catch every other word, and it's already above my pay grade, or at least it was. That's what the market needs, just wishy-washy, no clear message. Did you know that before Powell, the Fed only had a live meeting every other month? Every other meeting was live. The first thing he did when he took office, he said, "No, we're going to have a live meeting every month, every meeting," which means that if they said, "Oh, they're going to cut rates," they rarely cut rates on a non-live or moved rates on a non-live meeting. So we had events only every other meeting. He comes in and says, "No, every event is a live event." Like, thanks a lot, pal. Somebody who does not like headlines, does not need headlines. Headlines just, it's like rain on a race. It neutralizes the advantage that good drivers and good cars have. On a rainy day in a race in Formula One, for example, that's the only day where you can have a non top team win. Otherwise, there is no physical way these other people could beat us without a neutralizing outside variable that we don't know about. And that's the effect that headline has. We are extremely confident in our charts. You see it. We can't make this shit up. Bitcoin. You can't make this stuff up, right? Okay. The put we talked about, if you didn't close it, is up $50 more. So that's an easy 25, 28, 27% win, $50. That's like the fifth one today. Maybe seventh if you include calls that I didn't write down. It wasn't chance. You saw us talk. We gave reasons to every entry. We gave a path. We drew the path. The path got diverted. We didn't back out because it was still possible, because we looked left and we traded right. So now we have red ticks in the ETFs and the mega caps. You locked in a debit put spread for free. So you bought a put and you just sold a put to make a debit put spread, and it didn't cost you anything. Nice. So now you're betting negative with no money. All right, lesson time. Lesson. Here's somebody in this room that just traded on their own. They bought a put. When I said you can buy a put, they know charts. And so the put they bought is now very, very green. And now they were able to go lower and sell a put and collect more than what they paid for the higher put. So they got paid credits to own a bearish bet. So now he owns a debit put spread for which he didn't pay for and maybe got paid for. So even if he sells it for 10 cents, which is losing, it's pure profits. So now he can wait for Powell, and he's betting for no money on an outcome, bearish outcome on Powell. If it drops, he makes money. Every penny red is pocket money in his pocket. If we spike and he sells it for 30% of its value, meaning it lost value, it's still pure profit he didn't pay a thing for. What he did is he legged into a bearish position with no money out of pocket because he made a bet, it went his way, he locked his profits by going lower and doing the same thing, opposite thing. That's a nice. That is the best case scenario. The credit call spread still 45 freaking dollars. 43, 40, 45. The credit put spread 30. It hasn't ticked above 30 yet. Which ones? Them things. Where are they? Okay, these two boxes. This red one, this green one. This thing. So it was 50 and 48. Now they're 45 and 30. Go figure. Look at the ETFs falling out of control. A minute ago, they were rallying out of control. KRE, 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 XLF, XLF, XLF. And look at AVGO, higher highs. Doesn't matter. It's one guy. Micron is doing well. So there is a segment of the semi. Maybe it's SMH. Look at the SMH. They're up 0.4. XLK too? No. If I'm long a call, I exit as we approach that red line right there, 683.1. If you think we're going higher, don't exit, because if they get to 683.5, they probably go to 683.8. I think those two yellow marks should be incredibly difficult to overcome. The top one is shortable. Like if we get to the top one at 683.6, it's shortable. Like I would rebuy the same put, which is still green, just for context. We are selling rallies. We are making lower lows. That's a low. That's a lower low. That's a lower low. That's a high. That's a lower high. And that's a lower high still. So if you want to break the algo for the last hour, you want to get to 683.45. That will break that algo. Okay. For context, the Maria, I've got a story about that. For context, the person who took that debit spread, the potential profit is $1,000. Okay. That's what I'm saying, Maria. We were in Florida as a group, and I'm walking around with the team, and we walked right by that store. I was like, who in their right mind calls a company that? I mean, what? I got another one for you. I was helping somebody find a laser etcher. I'm not making this stuff up. One of the three machines, I don't know much about it, so I did some research. I found three machines. The one I ended up choosing is called the Laser Pecker. I'm not making this stuff up. That's the name of the machine, Laser Pecker. Look it up. There's version 1, 2, 3, Laser Pecker. Stay away from me. Don't worry about it. You're not my type. Mark, what sofa do you have? Yeah, exactly. Seriously, Love Sack? What in the world? What is the ticker for Love Sack? Is it a public company? Sack? Okay. Serious. We're a little bit nervous ahead of Powell, so we're giggling. 8 minutes. What are those? Throwback to Instagram from a couple of years ago. That was a good laugh. I'm not kidding. Let me go find it. I'm 99% sure it's called a laser pecker. Laser pecker. Yep, there it is. Laser pecker 4, laser pecker 5. Laser pecker. It's $2,600. You know, the same people that did STP or some like Mopar. Look, see? Laser pecker. This $600 one is good. Oh, is it? Awesome. Thanks, John. Is this Florida, John? John R. San Francisco gives birth in a Waymo self-driving taxi. Whew. The taxi deliver that help, did it have a robot from Elon helping? The put is up $47 for context. Now, if we finish the now orange line, yeah, I did change the color twice because I needed to differentiate it from the blue box. If we finish that orange triangle dip down to the arrow, now we have a problem for the bulls, but it will get disrupted 6 minutes thereafter. I don't think they should do anything ahead of Powell. And when Powell happens, I put it in writing, but here's the sequence of events. On the hour, the CNBC reads the contents. They release the statement. Other entities with big bucks get it instantaneously, like CNBC, and they trade right away, the headline. And then Steve Leisman will tell you what to think about it. Okay, so he then controls your mind. He tells you what to think about it. And you go ahead and trade the woo-wee, and then 20 minutes go by where Powell comes out and reads that statement. So there's no more new news. Like there's the initial blah, 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 and then nothing. And then I think half an hour later, he starts taking questions. I think the questions are scripted. He used to answer off the cuffs and he got in trouble all the time. He hasn't done that in a long time. So I think they force people to give him the questions ahead of time and they pick the questions they want to answer. So he's prepared. But nevertheless, it's still information that was not included in this statement. The statement tells you we're cutting, that's our forecast, that's how many people did it, blah, blah, blah. Those are facts. And then after that is what do you think? What do you mean by blah, blah, blah? So I haven't seen anybody put his feet to the fire at all. It's like they're not allowed to ask the questions. Like I would ask, how hot are you willing to let go of the inflation? He said, oh, we're willing to ignore inflation. I would ask, there must be a number you're not willing to endure. 4%? I'll ask him, what if inflation got back to an increase rate of 4%? Would you still be willing to cut? More importantly, will you be open to raising? He'll say, oh, he would probably say, it's too unrealistic. Is it? It's not that unrealistic. I would tell him, how are you using data that is unreliable? That's another foot to the fire. You're using jobs numbers that are deemed unreliable by the people that put them out. They have told us 2 years in a row they're off by 1 million. 2 years in a row. Do you have other sources you're using, sir? Or are you relying on garbage data to give us garbage decisions? I would ask him that in nice words. I will put it through ChatGPT. But nobody is putting his feet to the fire. They're afraid of what he would say. Here's my take to you. The Fed is not in control of anything except the overnight lending rate and how much money it dumps into the economy. So it can only create inflation. It's not going to save the market. It'll save the market's psyche for a little bit. But if the recession is coming, the Fed is not going to be able to do anything. They will flood the market with money and cause more inflation, and nobody will be spending anything. Would be all in a deep recession for a long time. The impression is that the Fed can save the market. I don't believe it. What they can do is very limited. They need fiscal spending, and that's from the White House. Okay, 58. I'm not going to listen to him. I don't know what they're going to say, and I don't know what they're going to do, and I'm going to try to trade the price action. My plan is, if we spike into the prior fail, you try short or you exit your longs. If we continue lower, we know where we're headed. We're headed towards 681.50. 682 has been the target since yesterday. We have been very resistant. That's my plan. If we fall fast, you can sell a put spread. If we rally hard, we can sell a call spread. Set closing orders for your credit put spread and your credit call spread for 15 cents or 10 cents. This way, you might get filled out of your risk in the mad rush. That is something you can do. You can buy a call and a put at the same time if you know how to do straddles. I don't. I don't like them at all. Drum roll. We have 50 seconds. Are you nervous? I feel butterflies. You made 30% on your put, you're out. Excellent decision. You may have missed out on 100% more. That doesn't matter. It does not matter, I promise. In the long run, the goal is to make money, not to make all the money. There is this false sense of security that the Fed can save the day. The Fed can help. The White House can save the day. They can rain cash from the sky, literally. They can give out money. They have. I don't think we have that kind of cash anymore. We're buried in debt. So we are in a pickle where we need to take some pain for a few months. It's okay to be in a recession for a few months. We keep putting the artificial safety net that makes the market with zero risk, so everybody buys every dip there is, including this one. There we go. He cut. He cut. He's into the resistance zone that I thought would be an exit for calls. If I had calls, I would be out here. Look at the ETFs. The financials are not moving a lot. This is off the. That was target 1 from this morning, and target 2 is the X. So we still have a handle on it. It's everything. So he is not nasty. I can tell you he didn't say anything hawkish like everybody is expecting. They said, oh, hawkish cut. Look at that. Straight into the X. Headline or not. 2 hours ago, we had upside targets. The white line, they've gone to it twice, and the white X. They just went to it. If I was long, I'm out. That was our target technically, Powell or no Powell. Now we wait. Let this mess work itself out. Okay, so what are you going to do? KRE goes back to the highs of the day. XLF goes back to the highs of the day. They still have the crap to deal from yesterday, the XLF, not the KRE. AVGO was already breaking out. It's finishing its breakout. Microsoft still in the toilet. This is the low the earlier they lost. Apple, neither here nor there. NVIDIA, 184. That was a target I mentioned about 30 minutes ago to somebody that asked, where do you think it can go? I said 184. Costco, still at the lows of the day. What else is going on? Okay, Micron took a little goosing. It was already strong. SMH. Nothing really changed. Just green ticks off of emotions. This is a relief pop. That thank God he didn't say anything bad. I don't know what he said. I can tell you he didn't say anything bad. He cut and he didn't say anything. Now, 30 minutes will go by before the next set of headlines. You can go take a break. Yeah, there's Shrek right there. You see, you don't need headlines. And here's the stupidest thing. The VIX goes to the low of yesterday. Like they were so worried. The credit call spread is $45. Still. The credit put spread, $20. Nothing has changed. Nothing. Nothing to see. There we go. Back to my line of contention. This is a support zone that they failed to hold earlier. This is their second chance. They just got handed a gift of Powell. Powell said, let me get you back above the hurdle that you fought and lost today. What can you do with it? This is their chance. I love this job. Can you tell? There are no open candles above here. This is the last open candle right here. So there's no reason to go higher than here from the candles on 30 seconds. And if they're closed on 30 seconds, they're pretty much closed on everything else. Let's see if they can hold the open candle at 683. There's reason to go to 683. That spike left unfinished business. The 683.1 to 683.05-ish. Let's see if they go there. That's 50, 60 cents of downside. So now the bulls have everything. They have momentum, they have talking points, they have the all-time high levels. The IWM did not go higher than yesterday. That's weird. By an inch. Again, 2 days. No Mountain Dew today. I've had two things. That's good enough. The one is very mild. Um, so back to the bulls. They have the momentum. They have the soldiers. The KRE just made a higher high. Wow. Look how. So the KRE. Okay, it's sensitive to what Powell says because in theory he can affect how much they pay for cash. So in case you don't know, Powell can move only the overnight lending rates. I believe that's what the banks charge each other to borrow money overnight. So that's their cost to borrow. They lend to us to buy a car at a 5-year rate ish, to buy a house at a 30-year rate. So the goal is to make it cheap for them to borrow so they can be more enticed to lend, right? What they've done is pack the cash into their pockets. Proof positive, go out and get a loan on a house. You will pay 6.5% unless you're willing to settle for an adjustable rate mortgage. Those are available at 5.5 and not jumbo. I don't think you can get that even on an adjustable rate for a jumbo loan, meaning 700 plus, I think 680, whatever the number is now on the jumbo loan. So they're not passing the savings along to us, they're packing their pockets. Nobody talks about that. So the effect of rate cuts is minimal to us, but it's bigger on the banks. So the banks spiking makes sense. Micron spiking makes no sense, but it was already strong. Just to pick one. I don't care about Micron. I'm not short. Okay, let's look at the options. What do we have? Very bullish options. Nobody wants to sell anything. We are slowly establishing footing at the right spot. We identified the yellow markings as pivotal, and they finally succeeded in holding them. Can they make a higher high over the X that was our target? So he's not saying anything new. The statement has been disclosed in one shot. Let me know when he starts answering questions. I'm going to guess in about 30 minutes. He will start to answer questions. CNBC must be adding to the interpretation. They usually have more than one expert that says, "Oh, yeah, but this is what that means," and this market might be moving on those comments. I'm not so sure. I find it hard to believe. I find it strange, not hard to believe it's happening. I find it strange that they make a higher high, higher than the event, without him saying anything. What did he say? Hello, welcome. We are up 3 SPY dollars on this, by the way, if you're keeping track. We went from 6845 to 6875 on the ES. Finally, the small caps made a higher high. Finally. It's been a minute. So what can I do? I can short the spot. We know what it is now. Look at Palantir. What about it? Palantir, the number to beat is 193 or 180. I could short this rally. I can sell a call spread at 69.05 and collect $75. Today or tomorrow, it doesn't matter. Okay, time to reset some longs. Shorts, selling calls. For next year. I don't need to fight with these fools now. Why am I doing this? Because this is a relief rally off of something bad never happening. They were expecting hawkish comments. He must not delivered them. It's simple. That's my take. I don't know what he said. I didn't read the statement. I can trade without it. So I just tested premiums on the RUT, for example. If I sell a 20 delta for March or late February of next year, 20 delta, they would give you $180 on a $10 risk. So if it was $2, that's 20% reward. As long as we don't go past 2780 RUT, 2780 RUT. The RUT right now is 2540. I just sold three of them just to see if they're available. They filled fairly quickly. I had to give up 1 penny for that. This is me picking a fight without having to fight. If you're already short markets, don't do that. That just adds to your problem. We may have ticked a new all-time high on the IWM. Have we? What is the IWM all-time high? 255? We did. Yay! There you go. We are so strong. IWM all-time high. I'm shorting the crap out of it for the next couple of days and see what happens. What I can do also, I can go to, say, February and sell one in the money. Wrong. If you want to pick a more aggressive fight, odds-wise, less effective, less aggressive fight money-wise. So you balance the odds of success versus how much money you're putting at risk. If I sell it like the first one I mentioned, I'm putting 800 at risk, trying to make 200. It's pretty good reward to risk. If I sell it just above here, it's 50-50 chance of, and also 50-50 money. I risk $400, $500 to make $500. So what are you comfortable with? The VIX is still higher than yesterday's lows. Today's highs in the stock market are way higher than yesterday's highs. So do I think we're going back to 682? We are, of course. Today, I don't know, but I guarantee you a trip back to 682. The put we mentioned is down 40%, so it's not demolished. Why not? It ends today. It's way out of spec. Why is it not demolished? What is rate now? What do you mean? What is the overnight lending rate? I don't know. Actually, I could tell you. Where is it? 3.8? What did the TLT do? What? Okay, so the TLT says no rate cuts, by the way. The TLT only being up 0.2%, I need to see the TLT up there. The TLT, if it makes a low, there is no rate cut cycle coming. Okay, so this is wrong or the market is wrong in their reactions. That's my take. That's the range that they have forecasted for it, but he's asking what is it now? Let's ask. What is the overnight Fed funds rate now?
The overnight Fed funds rate is currently 3.89%. That's the same rate at
3.88 is what I said. That's the range they have forecasted. Stop listening. I need to give her a name. How about Alice? One of these days, Alice.
Alice is a lovely name.
Oh.
It has a classic and familiar feel. Does it have any special meaning to you?
Stop listening.
Got it. If you need me to stop listening temporarily,
bye-bye. Gemini. Okay, we're done with these. The range is no. We haven't let go of the range. This yellow line has been pivotal for days, if not weeks. So we're not done with it with one tick. Why is the VIX not lower than yesterday? That's a question. Costco, the pain, man, the pain. Wow. Heading south. I think I had 1 2-day trade. I'm trying to find it. There it is. 28 delta on a sold call. 28 delta. Typically, I don't do anything for 28 delta. So I'll decide by the end of the day. Okay, so we spoke about it. I have a sold call position, bearish. It has 70-30 odds in my favor still. It expires in 2 days, not tomorrow. By the end of the day, I may decide, depends on where we close, what to do with it. So what I would want, not to give up on it, it's winning. I want to slow it down so I don't get blindsided. So I would roll it out. And that allows me to roll it up with no money out of pocket. So what that does is slows it down so I'm not so panicked and worried about it. It delays the win. It might keep me, like, it might work out the way it is and I would have missed exiting a trade for a win, but it also delays and eliminates the, oh my gosh, I need to deal with it right now. So as far as buying puts in the IWM, that can work as well. But you'd have to be surgical. Let's say we have another follow through green tomorrow. What if he comes on and he says something even more bullish? And we have the White House saying bullish things every day. We have the news media, the news cycle regurgitating the same headlines over and over and over and over and over again every time we have a red tick at a right moment. And then we have the guy that hates the White House also helping with the upside, even though he doesn't have to, and breaking his mandate. His mandate is to create prosperity without creating inflation. Well, he said, I'm going to ignore my job so that the White House lets me finish my building. He didn't say it that way, but that's why he's doing it. So that the White House doesn't sue him personally for misappropriating $4 billion to build the building half built. That is speculation on my part, but it fits, doesn't it? The downside reaction was the odd man out. I would not have held put confidently because only one scenario is if he was super nasty and he's chicken schmutz, he didn't do it. He should have, but he didn't do it. He should have for the sake of us. Go out and shop. Go out to dinner. Go out and buy essentials. Go out and do anything except fill gas. Things are astronomically expensive, like over the top. You will find deals. For example, I have a monitor here, a 50-inch TV. That was a deal, $267. Okay. I have a monitor downstairs in a box that I believe it was not a deal. It was expensive. So you can find bargains, but generally speaking, if you go to fly, it costs more to fly now, 2 times more than last year, 3 times than the year before that. I'm speaking facts. I fly the same routes all the time, and they're cutting seats and they're cutting shrinkflation. Okay, with shrinkflation, things are more expensive. I had a meal the other day. The person I was with, they said they come here all the time, and they said this piece of meat is half the size it used to be. The same restaurant, same price. Shrinkflation. Things are super expensive. And here's the head fund guy of the world, the head financial guy of the world, decides to ignore inflation for the sake of headlines. That is not a good situation. Be careful. committing longs from here. You can trade as much as you want, long, short, long, short, long, short. If I had $1 million, I would do what Buffett does. I will sit on it and get 5% on my money, miss out on 5% of upside, and then miss out on 20% of 30% or 40% of downside in the next 18 months. So the VIX, 16 for 10 cents. Let's see what it does with that 10 cents. My plan is, by the way, that trade I was trying to close, it was a fictitious quote. It's been open all day. I'm offering more than the bid, and they're not letting me do it. So it's a fake quote. Be careful when you're executing trades today. What? Okay. Yeah, there's some funky quotes everywhere. Be careful. Like everywhere. The industrials broke out. So the industrials are ones to break out. They cost a lot of money. Lower rates will help people lease them easier. So Caterpillar equipment and such, I get that. But some of them were already rallying. Okay, the risk appetite gauge, the ultimate risk appetite gauge, two of them, Palantir and Bitcoin. Palantir last night, had a headline. I have no idea what it was. It shot from 181 to 193 in minutes. And then it gave it almost all back. And now we're rallying into 190, 191. So the question for Palantir this week and next, will it take out the high from last night, overnight, before it takes out a lower low than yesterday? Draw a box, put alerts on Palantir. That will tell you risk appetite. The old bull of a couple months ago would have said, yep, no problem. I'll be at 210 in Palantir like that. Especially that it's been there before. I believe it's been over 200. So it's not like it's a psychological number. All right, let's see what we're going to do here. I have sold calls on Microsoft at 515 for January 5th. Check that, 9th. The sold call delta is 0.13. So the odds are in my favor. You would need a 2 sigma event for me to lose money. I'm not closing that today. Microsoft's a fantastic company, but the odds are in my favor. The person that bought those calls from me is slated to lose money, and I'm not losing money. I still collected more than it's worth today, so I'll sit in it. Let's see here. Gold. My bearish bet on gold is still green, not doing anything. I bought puts and sold calls. The puts are green. So if the puts are green, the sold calls are definitely green. So I'll sit on those. I have a batch for sold calls for January. The puts are February. So it's a longer dated put. They were like $1,300 to buy. And I have another batch of sold calls for February as well. Emerging markets short not working. I haven't added. I may give up on it. It's got 37 days on the clock. I'll wait. Boeing short, that worked. I don't need to do anything. I won. I had every month I had short Boeing. Amazon. We shorted Amazon on every rally. We made a ton of money. There's nothing to be played here. We're green. AMD, after this week, I probably won't be short anymore. That was a tough one. U.S. has seized an oil tanker off the coast of Venezuela. Yeah, we're just looking for a fight there. Is that moving oil up? That should. I moved some things around. Where is Micron? Yeah, it did. It spiked oil. Okay. The put is down 30%. The same put. For context, it's down only 30%. Let's say you took the put. You didn't book your profits. You experienced extreme loss. You experienced one of the greenest candles there is against your trade. You survived it. And the only thing you lost is 30%. That is a cheap lesson for you. If you can stay in it, you might recover more. If we get down into my yellow box, you will recover more. There are sellers in the options. Don't hold calls with confidence for today. And You got it out of the way. You got it out of you. You just went through a whole cycle. Yes, I'm winning $50. Oh no, I'm losing $50. And you saw huge red, good red candles, solid, not huge. Huge green candles. Look at them. A double top and another poke higher. Headline. You went through the whole cycle in an hour. Cheap lesson. Cheap lesson. And it was real money. It wasn't paper money. Now we're falling into the prior highs of this morning. We were struggling to get out of this morning. This is their chance to use it as support. Remember, that dip from Powell provided them that opportunity. It would be a huge loss for the Bulls today, disappointment, if they come back and close below 683.20, 40, 50, any one of those. If they close towards the middle and lows of today. So before the market opened, I sent a note and I said, look out. What you're trading today is the middle of the range of Friday versus the lows from this week. Those are my comments. Am I right? Okay, let's go see how solid, simple statement for a morning note before the market opened 2 days in a row. I can't see the date. So today is this one. Aren't we there? I think we're there. Middle of the range. For some reason, on Thinkorswim, I'm having a hard time lining it up. Okay, let's take out all the lines. Oh, by the way, that red thing is bearish. They already hit target 1. Is this Friday? Monday. Is this Friday? Friday. There we go. Okay, check this out. Wow. This is Friday. Top, bottom, middle. 3 days, 3 point of controls right here. I said 2 days ago, I said today, you're trading against the middle of the range of Friday versus the lows from this week. We made a lower low today. We did not make a higher high with that regards. This is not a bullish day yet. This is a relief rally. Thank God he didn't say anything worse. And it's playing out. Now he comes out and talks. I don't know what he's going to say. I don't know what they're going to ask him. I don't give 2 rips about it. He's lying to us. He can't control the market. He just can control our emotions. You plug your ears, you don't have emotions. You open your ears, you listen to him, you get emotionally involved. You make decisions that are not mathematically based. Sell calls, sell puts, buy calls, buy puts, do everything based on math, logic, and good charting. You will not make an easy mistake. Use your heart, you will make 100 mistakes a month. Look at this. The mega caps completely gave it all up. All of it. 100% retracement on the mega caps. The 7 largest companies, which means the Qs are red. They still are red. The S&P is flat. And just like that, the put is back alive. Exit. You didn't lose any money. You had a free lesson. You went through the whole gamut. Free lesson. I love it when a plan comes together. So we're streaming live. It's not even recorded live. I mean, we recorded it, but you can mold your recording. We're streaming live. We're putting our lines, we're putting our comments out there on the line. I love it. Look at the KRE exploding. Up 2%. That is an extreme reaction. That's the only question mark I have right now. My experience is when the KRE does well, the market follows. So don't be too short. We could bounce and soar, or the KRE needs to crash in the next couple of days. Well, it's crashing up right now. Uncrash up, just reverse what it's doing. I can't reconcile this. Regional banks soaring without the mega banks following. They are at different stages. This is an extreme move on the KRE looking back 30 days. Oh, he's answering questions now? We'll see. 684.50 matters. That yellow line, it matters from these candles. If I bought a call because I fell into support, which was the right thing to do, I would exit as we're approaching 684.30. That's intense, baby. I love it. This is bullish. They buy dips, and they're so quick getting rid of the option sellers. It's a rigged market. Rigged in the sense, not that they're cheating, though they are. Rigged in the sense, lopsided, favors the bulls. We had sellers, they quickly disappears. The buyers don't disappear because we are so confident in buying the dip. But they have one foot out the door. We buy the dip, we're long, and then somebody farts somewhere in the world, something that has nothing to do with anything. Somebody says a complete lie. They smell something. We have 4% down days. Like 1010, we had one of those in November, I believe. I tell you one thing, if we make a lower low today, which will be a miracle, the floodgates will open to the downside. The credit call spread for today is now $33 to $40. Okay, so why isn't it more? It should be more. If we're going higher, it should be more. There's still plenty of time. An hour and a half is plenty of time. He's answering questions now. Uncle Jerry is talking. Where is Auntie Yellen still in the White House somewhere? No. This Christmas ornament up here says don't hold puts. Not going to happen without these guys disappearing. He's reading the report. He hasn't read it yet. Half hour later, and he still hasn't read it. So the Q&A is going to be after the market closes? That's never happened. Oh, man. I did not make room for that. He hasn't read the report yet. We have 32 minutes later, and he still hasn't read the report. Can someone confirm that, or are you delayed? That is outrageous. I have never seen that happen before. I don't remember that being the case. Anyway, okay. So these guys are looking to break out. We may have a higher high here. I'd be surprised. This is our X from 3 hours ago. Once they broke out of my opening range, this was the secondary target zone, right? So we're not surprised we're up here. We're not surprised that this level matters. Check this out. This was target 1. And look how they stopped at target 1. A little bit. They hiccuped. So the levels are still in play. I'm going to keep them here. It's a good visual. We have the yellow, which is now confirmed twice as support. So today and tomorrow, there should be no reason we go below 683.50. What is that in SPX? Okay. And these guys have the breakout. The KRE. Oh my gosh, the KRE. You can't imagine how big this move is in the KRE, like to the market. First of all, mathematically, this is above 2 sigma event on the KRE. This is almost 12 times the amount of travel in the KRE per day. 8 to 12. I'm doing air math here. This is outrageous. Something huge is happening here. I mean it. This is outrageous. I'm going to put it on the screen. This move on the KRE, I've never seen this like this. The other day, it had a 4% up day, but it was a headline specifically targeted to the KRE. It was when they freed the banks from holding cash. So then that cleared up $2.5 trillion of cash per Basent. This is a move almost as big as that without that headline. That is crazy stuff. There's a trade here somewhere. Woo! Woo! Short with a stop. That's what we do with that one. Very tempting. So those red things, target 1 has been met once. Target 1 and 2 have been met, different ones. They're all nested. This is huge move in the KRE. The XLF followed, and so did the SPY. Do you guys believe me now? Yeah. It is like proof. I don't need any more proof. This is proof positive that is correct. What happens to the KRE, the market will follow 100% of the time. We haven't had one time not work. So next time we buy calls on the KRE rip. My bad for not pounding the table on that. Not one red negative gamma. Not one. The QQQ are now plus 0.3. They went from minus 0.3 to plus 0.3 in 10 minutes. We're going to hit a new all-time high. Or we're going to give up a lot. Let's see. What, did he say hello? How are they moving this on the same words? These are the same words of the statement. What is happening today? This is hilarious. This is absolutely nuts. Credit call spread, 1 week out, 1 month out, you pick it. Bill, what are you doing here? Welcome back. Go out longer than 1 week. Give them some time to have a spaz. I'm going to buy a KRE put for February at 66. Just to get it out of my system. It's like $200. It filled? It filled. How much was it? $292. This is an at the money KRE put. I don't know what's going on. I want a piece of it. I'll reevaluate tomorrow. Put February, $66. The strike. It's quoting 300. It filled for 290, 292. The VIX did tick lower, 1626. If you don't have VIX calls, might be a good time to add for protection. If you want to short the market with the VIX, it works. You're not going to get rich off of it. I'm not loading up KRE puts. I want to see what's going on. There might be something going on that we don't know about. That is a drastic move. A drastic move. Like, I can't emphasize how drastic this move is. Based on the size of this move, the S&P will be at an all-time high this week, most likely. That is insane. So I'm going to see what the next few hours are going to be. I'm going to turn off all the lines. Actually, let's go to the SPX. The SPX is a clean cut. I'll go to 1 hour. No markings. Okay. This is the middle of Friday, where we are exactly right now on the SPX. Remember, the SPX has no overnight. It doesn't display the overnight action, but that is the big daddy that everything else follows. Let's go to the futures. That's the futures contract that trades all kinds of hours, and it's easier to see levels, like big picture levels. Look at that. That red mark is not mine. That's a Fibonacci level. That's an automatic drawing from these harmonics. Target 1 was 68.70. The credit call spread for today is $75 now after the spike. So now it's taking some heat. They overshot to the upside. They should have stopped right here at 60.80. 68.80, sorry. Look at it. So I said we need a plus 0.6 today in order to clear, right? So they got it. They have it on the SPY if they hold here or higher. And what's going on? Red ticks. I was going to measure how far away from an all-time high we were. I'm curious. At the highs of the day, we were 0.26%. We were 1.8 SPY dollars from an all-time high. Chew on that. Now questions for Powell. We're already having red ticks. He comes up to the table and they sell everything. The put from earlier today is down 50%. Okay. Yes, 50%. That's $90 if you hung on to it. If you're tracking the highs and lows of the past. And now it isn't. He couldn't have possibly said anything. He couldn't have possibly said anything to warrant $2 of downside. He hiccuped. He swallowed two. He breathed in when he was supposed to breathe out. Breathe in, breathe out. Name the band. Tied to a wheel. It's intense. I'm wired. There's no positive gamma. There's nothing but selling. Don't hold a call. Oh no, we turned on the tracker there. Oh, there goes the options. Okay, I think we're green on that put. We are. I'm not taking it off today. The put from this morning, not from this morning, from earlier, the lesson of the put is losing $30 still, which isn't too bad. But here's the thing. We're bouncing off of a proven support zone from today. They better hold it. Okay, so now you see the buyers come in, all these green bars on the bottom right-hand corner, the SPX buyers and the options. Wow. The credit call spread that I said you could sell it is back down to 28 cents, $28, $30, $25. The credit put spread still carries some weight, $15, $10. The Iron Condor is going to survive. This is exciting, crazy. The KRE is crazy. Yeah, this is okay. The KRE I can't explain. And the XLF, I'm holding my breath here. The XLF almost took out yesterday's high. That would have confused the F out of me. It still may happen. I hope not. Dang. Gangster people. Whew. They should stop at 684.85, 684.90. Like they shouldn't beat this letter O. Let's see if they do. They have no reason to. Let's put it that way. Okay, what is this other yellow line? Brush. I don't remember it. you need a 5-point harness. You see all these long sticks? They want to hold this floor, so they're doing their best. Who's not helping? Microsoft. Who's not helping? NVIDIA. Who tried to help? AVGO, KRE, XLF, XLI, Micron, SMH. Somebody reports tonight. AVGO. Or tomorrow night. Tomorrow. Oracle tonight? Okay. AMD not helping. Shh. Adobe and Oracle? Okay. I will do the options thing in about 20 minutes on the earnings. It's going to be wild. So Oracle is reddish ahead of its earning. That's a good thing. See, that's already too much. Look, no red. They flipped from all red to all green. Wow. What did he say? This guy needs to shut the hell up and get off the screen. This is what I mean. When you have headlines, they neutralize the advantage that we have. The levels will still work out. They will mean something. Case in point, we're ping-ponging between the levels we talked about. The speed with which we're going from one point to another that we've identified as important, that's the messy part. Well, let's see. Another wish lower that doesn't hold this tick will have some severe consequences to the downside, although highly unlikely given the appetite with which they are flipping green. The VIX stabilized. I need water, but I can't leave. So the largest candle on our screen is this red one. You mean to tell me they want to push past it like it's not there? This red candle right there. That makes no sense. Yeah, the QQQ is so volatile today. So volatile. And all of this without the leader of the free world participating, NVIDIA. Microsoft down 3%. Can you imagine? Listen, we don't have a red market. We have 2,000 stocks that have made an all-time high. We just broke into a new all-time high on the IWM. Shh, don't tell anyone. 2,000 stocks have never been higher than this. And we are talking about cutting frickin' rates to save the economy in spite of inflation. The only reason they want to do it, my take, is because we have banks that are in trouble financially. They're holding a bond portfolio whose value has deteriorated. So if your bonds are down, you cut rates. If the yield that the bond pays is lower, the bond price is higher. That's how you bail out Silicon Valley Bank. I think we have scenarios like Silicon Valley Bank where the banks, KRE banks, are holding bond portfolios that are in trouble and leveraged. And so they don't fail, they need to cut the yields. That would make sense. I don't mind them cutting rates if they're not lying to me. But to tell me they need to cut rates because the economy is weak is bullcrap. Go out and shop. You won't find a parking spot. I went to an area, outdoor area here next to me. You would circle for 30 minutes to find a parking spot. All the flights are full. All the prices are super expensive. Where is the need for a rate cut for the economy? There isn't. The jobs report, we're still creating jobs. We're still fully employed. The GDP is still not declared negative. I don't think they will. This is where they're caught between a rock and a hard place. This White House would facilitate the rate cut if they print a negative GDP. You give Powell cover, but that would mean they would admit a recession, and they're not willing to do that either. So we'll see what they do. Micron 270. Okay. It's been strong all day. By when? But this week or today? Today it says lower better. The S&P on the 5 minutes, on the 10 minutes inspires lower prices. Kind of like this one. This one on the 5 minutes inspires a dip towards 257. So if you want to go long Micron, I would suggest you enter on a red tick, at least down to 258.6 or 257 would be better on Micron. This says we go lower. 684. So the orange line again as a target 1. Target 2 probably 682.50. I wouldn't buy a put for it. The for today is just too messy. It's like playing basketball on a court where everybody's throwing elbows. Yeah, you know how to play, but there's no need for you to play. We already won enough, and now we're just tracking for fun. So, Amazon, get your act together. I ordered something. They delivered it 2 days ago. I got a message it's delayed, and then the same day I get delivered, and now they're telling me it's arriving tomorrow. Quandary. No way, Ray. No, you're joking. That happened. So we were talking about how they spy on you. So one of our members is in the room, and we talked about something, and it popped up on his Instagram feed. The laser pecker. That's crazy. Wow. Uh, Shameless. The KRE, another high. Here's my take. By tomorrow, people on Twitter are going to say what he said 1,000 times over. I don't care what he says. He can say whatever he wants. The only thing I would care about if he says, I'm starting a QE, then he should go to jail, like straight to jail. Having low rates is one thing. Infusing cash into the economy, free cash, brace, brace, brace. Inflation is going to go through the roof. I hope he doesn't say it. Taking a new high will accelerate towards 688.5, 691 zone. The credit call spread from this morning is still $70. The delta is 1.5. That doesn't inspire upside. Where are we? $25 higher, $2.50 on the SPY. Don't overstay your welcome in the longs that expire today. Roll them into tomorrow. Let's say you took a long and you're winning and you want to keep in it. Grab it, book it, re-engage with part of the cash for tomorrow or longer, so you don't get blown out. And up they go. Hours ago, my bad. KRE said go long. Missed it. Damn, missed it. Next time. The 27 sold call delta for 2 days out that I mentioned is now 34. Now it's definitely glowing orange. Not quite 50-50, but I had a bigger advantage. And just in a few minutes, now I'm at a worse advantage. So I will decide tonight, before the bell rings, whether to slow it down. I'm still okay. The odds are still in my favor to win, 70-30 ish. So I'm not panicked. These are heavy upside green pushes, even though the score is only 0.6. Okay, read the morning note, folks. Read the morning note. It says, I want to see the S&P at plus 0.6% for them to gain an advantage or something like that. S&P plus 0.6%, they delivered. So it is a green tick, but it comes from flat and fast. So the implied volatility is oomph. Like a drop. When you have a sharp drop, the puts get really, really hot. The next day, even though they don't recover, the puts cool off because they've had a day to digest. And this being 2 days out, I'm not panicked today. And I have, when the bell rings, and an extra 15 minutes to decide what I want to do with it. The easy trade would be, in fact, I'll do one now. I roll the expirations. 15, that's Monday. I'll go to Tuesday. If I don't do anything, they'll give me credit. So I would be avoiding problems and collecting money to do it. Let me do just one and see what happens. So it's pretty big credit. So what I'll do is I'll go up one level. It's still a credit. I'll go up 2 levels. It's still a credit. I'll go up 3 levels. So now I've improved myself. I've kept the 30 delta, but now I have more buffer. So that is how you slow down a trade. If I get a couple of red ticks, it'll fill. If not, I'll pay 2 cents. Wild. You see that it's hard to see. Members know it. There's a thin rectangle just above the second target for today, which they've surpassed. It's dotted. That has been in contention for a couple of months. No clues from that. This is hilarious. This is absolutely mind-bending stuff. Repercussions of this move. If they stick the landing this week, we haven't even started rallying. This is the start of another bull run, technically, if they establish it. That's why I'm so quiet. This push on the small caps on a weekly basis, the measured move has 2 targets. It's like 12 to 25%. It's a big swipe because of how it developed. let's say it's 10%. That means we have 5 to 8% of upside in the SPY like this, potentially 10 to 15% in the SPY if the IWM is able to finish its run. That will bring about a lot of question marks with regards to, okay, what am I paying for up at these? It's almost like there's a TINA effect into the stock market that nobody's talking about. TINA is an acronym that was made popular by the bond market when they had negative bonds in Europe. There is no alternative, is what it stands for. And it's like people are buying stocks because there's nothing else they're making money with. Everything is getting more expensive. Cash is not catching up to inflation. So if you don't buy stocks, you're left behind. Okay. But that's not how you build generational wealth. That's how you bury your generation in at the tops. Not my opinion, Warren Buffett's opinion. The guy that's heralded as the best investor of all time, or one of the best investors of all time, not traders of all time. Although he is a good trader. We'll see. Wesley. Is he done talking? The the dollar. Okay, so the dollar falls if we have irresponsible Fed actions. What does that mean? A country that is loose with its cash, its currency gets whacked. He's still talking. Awesome. He must really be needing to finish his building. I don't know why. He's out of that job in a few months anyway. I would not start longs here. Like investments. I would sit on it for a couple of days. If somebody comes and hands me $1 million and said, you win, put it to work. I'll say, all right, let's just put it and get 5%, 3 to 5% guaranteed. Let's say the market rallies 10%. You miss out on 5%. That's solid. Solid. You beat inflation, according to the government. There's only 3% inflation. So 5% will keep you afloat above the inflation. Cash is king, and cash is a trade. I want to take at the heat map. I don't think I'll learn anything from this one. We kind of knew that one. How about the S&P? It's a green day. Imagine if we didn't have the lead balloon called Microsoft. All right, Maria, good that you're hanging out. He wants a positive legacy? Like what? The legacy of creating the most inflated stock market on the planet? That's the legacy he wants to leave? Okay, mission accomplished. He didn't single-handedly create it, just like he didn't single-handedly create the inflation situation we have now, but he was a pretty good positive contributor to it. We can debate this forever. I think the moment on August 22nd was a crime in time. The fact that he used an emergency meeting, no, he used a non-policy meeting, Jackson Hole, to make an emergency announcement, and the market didn't freak out. There used to be a day when the Fed acted in panic, market freaked out. Jackson Holes. And now it's not the case. Nobody stopped and asked, why the hell is he panicking? Panic. When you take a non-meeting and make it a live meeting to change policy emphatically and break your own rules in the process, nobody's worried about why he's doing it. Everybody believes that's because the economy is slowing down. I'm not that gullible. AVGO is almost at the target we mentioned 2 hours ago. It was already breaking out. It didn't need Powell. And the target is moving. 414 might be it. And 414 coincides with what it can do on any given day looking back 30 days. That would be a legacy there, Mike. The XLF is just beat yesterday's high. Oh no. So we have another engulfing candle in the XLF. It bears looking at. My goodness. Technically, that's pretty rare stuff. All right, let's go to 15 minutes. Check this out. Why this is important. The range is broadening. The violence is increasing in the banks, which means they either have a mega rally from here or the correction is going to be hecka heavy. 2 days ago, the biggest bank, the best bank on the planet, JP Morgan, not the biggest, the best bank on the planet per Wall Street, JP Morgan said, we're not going to make a lot of money because we're going to do this and that and that. It got demolished. Nobody cares. Today, all of its sisters are rallying to the roof because of the Fed's actions. The Fed's actions puts money directly into the pockets of the bank because the bank is not passing the savings. The mortgage rates are still more expensive now than when he started cutting. So clearly, but this is the point that I'm making. This is a broadening wedge, which means the range is getting more violent. It's a flag, but it's a broadening wedge. It's very violent. So the pop could either launch a huge rally $56, 55 and a half, or a pop and a pretty big drop. So we have violence building, and they're ready to explode past the violence. Explode and go, or explode, trap, and implode. I've seen both happen. I'm closing for longs from last week. Okay. And blow off top. There you go. No double top. Walter. Is Netflix green? No. It got redder. Netflix got redder. One of the best financial companies on the planet. And when they like something, they like something. When they hate something, they hate something. Holy mackerel. Holy mackerel. I am in awe. This is above and beyond what I expected. The emotional response is they must have been really, really expecting some nasty stuff from him, and he didn't. I bet you he never mentioned anything about slowing down the rate cuts. This is maybe he even said we might accelerate the rate cuts. That's crazy. Netflix to 80. Okay, let's see where it's now. $80. Doable. Gaps down to 70. I don't think the market will be at an all-time high if Netflix is at 80. That's my opinion. So if you have the thesis of higher markets, you can't have an 80 thesis on Netflix at the same time. Where are we in the SPX? 68.95. This morning, there were, well, not this morning. So far, there are 78,000 call transactions at 6,900. If I'm selling those calls, I'm going to make sure the SPX doesn't go above that. Whoa, the industrials. Okay. From last night to this morning, the industrials The rarity of the size of the move off the scale. That is bunch of tickers. GE, Boeing, Cat, Uber might be in there, Honeywell, Deere, Eaton, those kinds of companies. They shouldn't be that flexible. Nothing changed that drastically between yesterday and today, between this morning. This move in the industrials, whoa. Is this an opportunity? Is this a huge opportunity to... Very freaking tempting, man. Sit on your hands, Nick. Do nothing. I would be shocked. It's in open air, though, Brian. I honestly don't know. How much? Here's how you can tell. You go to the... nope, this is not accurate. So we'll go to an options chain. IWM. Give me the value for today. We are up $4. So you want them to be up another $3? So we are at 257, 256, so 259. There is no chance, according to the odds of the options. Although the IWM, I've rarely seen like a 6-cent option play out to be 70, 80 cents, like 10x, but it's not obvious. In fact, it might be fun to buy a put for the IWM that doesn't cost much. Like this morning, we were at 251. For the 15th, put at 251 is $75 to buy. If you go out one day, make it Tuesday, and you go lower to 249, you pay $90 for that put. I honestly don't know what's going on. They are breaking out. You have to respect the upside. But maybe they dip one more time before they come back to establish footing so they can launch. But they've already done that. So this is the actual confirmation. So if by Friday they're closing this strong, the breakout is confirmed on the small caps. So be careful. If you're short already, don't add. You're already in the position. Don't add. We don't know anything today than we did yesterday. All we know today is that he didn't act bearish. People expected a cut. He got it. They got it. People expected hawkish cut. That was a new term that I've heard. They didn't get it. They got something better. They got a regular cut. They got what they wanted. Everything is awesome. So you don't want to short too harshly. That's why I said I'm going out to whatever I said, February, and sold the call spread. Get it out of my system. There's no need. You don't want to argue with stupid. They'll bring you down to their level and beat you with experience. Let's look at Oracle options since they report. Get that out of the way. 175. 2.5 times the implied volatility. They're pricing in about $22. Everybody's loaded up with calls, which makes downside pressure a situation. If I were to make a guess, 215 would be an area of rest. Remember this morning I said, what was the number from Tasty Trade? Trady Ticks. 69.20 was the biggest magnet. It still is, but it's not that massive. So it's kind of a choppy spot. 688, 686 our two areas of magnets. Clearly, we went to 88. Qs, anything is possible. 628 is the biggest magnet. 628, which we've already passed. Awesome. Great job. This is the worst case scenario for me, anxiety wise. I get uncomfortable when this stuff happens. Okay, so I don't act on it. I'm just telling you. And Oracle, the Trady Ticks bets, only one thing sticks out. Actually, they're interested in 190, 240, and 250. That's quite the spread. For March, $5 million bet at 220. Where is it now? 220. Okay, that's pretty weird. Somebody betting long just by buying calls at the money. And so there's not a lot of information from that. So I would say I would be hard pressed to hold calls, but if you do want to buy calls, use a call diagonal. You can buy a call out in time, 3 weeks, and sell a call that is 2.5 times more expensive than it should be, just because when the bell rings, before the bell rings, there's this mystery of the earnings, but by the time the bell rings, that mystery is gone, so the implied volatility will start to get reduced drastically. So the call you sold, or the put you sold if you're playing puts, will die quickly. Let me check to see if historically it moves a lot. If it doesn't, then you can bet on both scenarios not working, which is an iron butterfly or an iron condor. I'm not saying I would not do an iron condor or an iron butterfly. The last reaction, we all remember, it moved 40%. Okay, so here's a long shot guess. I believe that the last earnings report was misread. I believe the market heard one thing when the company was trying to say something else. And they have since priced out the spike. I shorted it and I'm out. And maybe they're not done figuring it out. I am not in the trade. I would not be in an Oracle trade. But if you twist my arm, I will take a bearish lotto, meaning $50, make money or not. There's a chance they mispriced it. I would not sell an iron condor or an iron butterfly on this bad boy. That's my take. Adobe. Adobe is never cheap. It's a good stock. They buy the dip. It's a good company, good product. They usually also, the last 4 reactions are red. The one before it is green. The 3 before that is red. All of the reactions except 2 are bigger than the straddle. The last 2 have been small. So if you want to risk an iron butterfly, it's on you. An iron condor, that's on you. At least it's not Friday. Like when we wake up tomorrow, there's still 2 days to trade. So it's somewhat forgiving if you don't nail the iron butterfly. You can do an iron butterfly there. Let me check on the options to see how they're lined up for Adobe. The implied volatility is almost 3x. So downside pressure here as well. 340 looks like a balance area. If it spikes, I think it gives it back up. If I were to do an iron butterfly, it has to be $25 wide, $20+ wide iron butterfly. You can set it at the money or $2.50 lower than the money. Yes. This is about banks. The KRE told us they were going to move up. Man, do we have an advantage for next time. Next time, definitely remind me, folks, to bet on the KRE. Holy crap. What an opportunity. I'm stunned. Oracle went back to green. Go figure. Yeah. QQQ 630. What? Get the out of town. No, that's not it. Is that a new all-time high? No, that can't be. Am I that stupid? Not remembering where the all-time high? Did we just make a new high on the SPY? No. Close though. Very, very close. What about the Dow? With the industrial being so loud and the banks being so loud, the Dow has a shot. So IWM did SPY closest, second closest, third closest is the QQQ. That's, I think, how it ranks, not scientifically. NVIDIA moved a lot in the last 2 days. Today, it just decided not to do anything. And NVIDIA not going to my target of 178 is a lot. It had a guaranteed target of 178. It just didn't go there. I'm biting my tongue from doing something drastic today. I'm just going to force myself not to do it today. So this is a launching pad waiting to happen on the ETFs. Okay, that's all of the ETFs combined. Oh, these lines we have to kill because 4 of them just split, in case you didn't notice. These are old lines that stayed up there. Are there more? No. Double the target. What? Okay. Any which way you slice it, we're either at target from a prior breakout or looking to break out. They're buying dips into moving averages like their life depends on it. So let's assume this never happened. We can. The Liberation Day never happened. The moving average would still be about the same because it was a flash in the pan. The upside target would be 62. Okay, how much of upside is that? 4%. So we're within the 4% range of an all-time high on this ticker right here. So I'm trying to look at the components of the S&P and see where they each might be terminating. Let's do the same logic on this guy. This is the best companies on the planet. So these guys that have the best P&Ls, best balance sheets, best income growth, best stories, best. They're lagging. That was Microsoft Pop, I believe, Microsoft Apple Pop. So there, FEG. Okay. So if these guys lose 8%, they're going to lose another 8%. That's a big if. Let's see what they do today, tomorrow, and this week. Credit call spread from this morning. Delta 27, still statistically viable. He's done. Thank you, Senor Powell. Hey, Walter, double top on the KRE. What do you say? You don't follow the KRE? What's wrong with you? So the KRE today was 64.7, 64.5 overnight. The delta of that right now is 0.09 for Friday. What? It's 9 cents to buy. There are dozens of thousands of calls in the money for this week. I would love to see what they're going to do tomorrow. Those guys. Neither. Neither. Maria, this is too. Oh, credit call spread. If I were to blindly do something, it would be credit call spread. But you have to risk the overnight headline. I don't like to put myself at a disadvantage with a headline, but if you twist my arm, I would do a credit call spread. I would How about I answer it differently? I would definitely not do a credit put spread. If you want to chase up, buy a call. You place yourself at risk about less money. It's cheaper to buy a call because of the VIX demolishing. And you have more potential money to make. You sell a put spread, you risk $400 and you limit the amount of money you can make. If you nail it, you barely make any money. Percentage wise, yes, but it's just not the right vehicle to chase with. Interesting divergence between the VIX futures and the VIX. Go figure, late in the day. The VIX futures just made a lower low. The VIX is trying to stabilize. What a joke. That's funny. What time is it? 12:27. Okay, I'm going to kill the live because I need to log off right after the day goes. I have some to-dos that just sprang on me. We streamed all day. We taught, we learned, we screamed, The credit call spread is 0.26 delta. It is statistically still viable, although this late in the day, you better know what you're doing if you're still in it. If you want to avoid the drama, you can punt it to tomorrow and deal with it tomorrow. They will give you a credit, probably 12:30. I don't know. Yeah, they should. It's not that much. It's $100 to close. How about this? If you close it for $100, you lost nothing because you did a call spread and a put spread, sold both credits and credits. The combination of both loses you no money if you pay the face value of the credit call spread. If I did 10, I would definitely cut it to size. To if I want to fight the fight last minute, I'm only dealing with half the problem, half the losses potentially. Okay? Yeah. Being statistically viable doesn't guarantee you a win. We see how completely erratic the market is today. I got a call from what? What? I already talked about Oracle. I wouldn't hold a call. You see, I need to slow these down. I said I might need to slow it down later. Oracle, I wouldn't hold a call. Whatever you want to do with Oracle, it has 2.5 times the implied volatility. So you can use, and if you want to play a put, you would play a put diagonal. If you want to play a call diagonal. I think it's worth it to do a debit put spread that costs $50, $150, something like this, just for fun. Don't do it for this week. Do it for like 2 to 3 weeks out. It costs the same. And that's a hunch based on the logic that the last positive reaction, although it priced itself out, may have built a high mental bar. Last time they said some weird things that say, my interpretation of what they said last time, Oracle, was that we're going to be busy for a decade. That's what they said. Like Boeing, we're going to have a deep bench as far as sales. We're going to be sold out for a long time, which is great. It's not the same as saying we're going to double our sales in 3 months, which is what NVIDIA said. I think both now NVIDIA and Oracle have raised the bar of expectations beyond a possible positive reaction to their earnings. That's why NVIDIA is not rallying on earnings and holding in general. It hasn't had many positive reactions. Oracle's reaction was like, whoa, 40%. That was amazing. I don't have any trades on Oracle, nor do I want to short Oracle. It can do its thing. It's a great company, has a great P&L. Nobody switches databases. They have a, what do you call that? A moat around their business. If you've ever run a business, owned it, ran it, if you were responsible for the business, you would rather replace an entire department's people before replacing a database. I bet you anything. Can I click back on my settings for XO reversal? You want it busier, Raul? I don't run Lotus Notes, no. Wow, you must be active. Oh. Well, it depends on the SPY 30.3 and 3 or 0.3 and 2. Like this morning, I was 3 boxes for the reversal, and then Powell happened. 3 got too busy, so I needed to dial it back. Like I can go to 1 or make the move bigger, because what happened was the VIX dropped, and that usually slows things down. But then the volatility accelerated because of the emotional reaction we had to the market. The KRE just made another higher high. What the actual hell is happening there, man? I'm going to have to read up on it. The regional banks. This is proof positive that I was right about either the fact that the KRE leads the market in actual trades, or that the KRE banks are in trouble and this is a bailout for them. Remember, Silicon Valley Bank was a very successful bank until it wasn't, and it failed because of its bond portfolio. They owned the same kind of short bond that was when Powell was jacking up the rates. The value of the bond crashed. So they were holding loans against the asset, which is now worth half of what it was before. So they called the loans chips on them. So the government had to take them over. And they broke the rule because he caused it. They broke the rule. Yellen bailed everybody out. They bailed every investor with every dollar. They went above the 500,000 limit because nobody in there had less than 500,000. That should have been there should have been an outcry on that one. That went under the, nobody paid attention to that one. Powell bankrupted Silicon Valley Bank by jacking up rates so fast when he was trying to control inflation. And now he's cutting rates in the face of inflation. Go figure. I have no idea. Whatever he said something to flip the regional bank to do something that is 12 times the normal size that I've seen for the last 30 days, which is outrageous. I don't know how that's going to play out. The IWM broke into an all-time high. The S&P is an inch away from an all-time high, like an inch. 6,900 today? No, man. It's right here. It's got a delta of 50. 6920 is the biggest gamma all day. All day on Tasty Trade. Let me go to it now. I wonder if it still is. Ooh. Listen, the algo flow just turned positive. This is retail. The algo flow just turned positive. This is the retail chasing. It counts. What do they call them? Dumb money. 688 is the highest magnet on the SPY by a long shot. So in theory, it pulls markets down. We can't go away from it too fast. 69220 is the highest gamma on the SPX, but not by a long shot. 692025 are the two highest magnets on the SPX. So you may not only get your 6900, you might get 6920 SPX if you want. What are the odds on that? 5%. Still has a value of 30 cents. That's pretty freaking high. It's realistic. It is possible. If you wanted to buy some VIX calls, today is the day you can. You guys are too looking forward to my pink tutu. I put myself out there on the line yesterday. I'm not doing it 2 days back to back. Silver goes from super red to super green. There goes that nice setup. Oh my God. GDX, flash crash, super spike. The markets are so confused on what is good for them and what is bad for them. And that's why they react. I mean, there is a theory out there that this run up in asset chase, the chase for assets, they're buying this, buying that, buying crypto, buying this, buying everything under the sun. Like that, my caricature the drawing that I did, that it's retail traders just grabbing assets, right? That they don't know what levels to capitulate at. They hear something bad, they feel bad, whoosh, they flush. And then they panic, they sold everything, they buy everything right back. So we have these very sharp V's. Today, twice. And in the GDX, extremely violent reversal. In the KRE, it wasn't a violent reversal. We were strong, we had a small dip, and then we got super strong. With the GDX, we were weak, we went to flat, we crashed back to the weak, and then we're now super strong at one standard deviation. So the GDX also is above 10 times the normal size move within 1 day. I'm not exaggerating about these numbers. These are mathematical facts looking back 30 days. The moves today, high, the low, the high, the XLF now is doing its thing following the KRE, are that big. So if you look back 30 days and you take open to high, open to low, and you stack them, folds over today in both directions across dozens and dozens and dozens, hundreds of tickers with no new change. We all knew he was going to cut rates. We all know what Microsoft is doing with regards to income. We all know where the GDP is. We all know where the jobs are, we think. No change in inflation. Nothing. All he did is deliver what we were expecting, and the reaction is so violent. Down, then up, then down, then up, up, up. It doesn't make sense. Be cautious. Be cautious. That's my take. The VIX is back to the coiled machine. So I will have to modify this squeeze because it did fire. It failed to get to its potential. So there's a chance the VIX goes below 14 in the next 2 weeks if this rally continues. Yes, below 14. Seems impossible, but if it doesn't bounce here, it's probably going to go below 14. Which means there's a chance they announce a QE of sorts. What? I need a few days to digest this. There's too many moving pieces. Don't do anything drastic. If you're long, great. Sell some covered calls. Sell some call spreads to balance your account. If you're short, don't capitulate unless you're running out of time. Earlier, I said I would roll something out to slow it down. I did. It didn't cost me anything. I just slowed things down. It's still statistically viable in my favor. The buyer of my calls is slated to lose, including with today's spike. That's part two. Like, for example, yesterday I did the right thing and I split my risk between expiration the yesterday and Friday. The part I didn't move won 100%. The part that I moved forward is now the part that I'm splitting and moving forward again. So I had a big position. It was bearish. It was coming due and it was iffy. I'm like, wait a minute, let's split it up. Do the right thing and split it up. So I got rid of a quarter of the trade and now I have the rest to deal with. And I split that now into 2 halves. One that expires Friday, still statistically viable, and one that expires in the middle of next week, even better. Also, the same statistical number because otherwise I will have to pay out of pocket and I don't need to. Okay, what did I do today? I bought at the money puts in the KRE and sold call spread, what was it? Late February on the RUT. And that's about it. I'm not going to send it out in writing. I don't have it in me. Today has been very long. And I need to log off. In fact, let me go kill the live. People in the live, if you're still there, thank you. Peace out.